Good morning, good afternoon, and good evening to the rest of you. We are back for another episode of Bitcoin Magazine Live. It is I, your host Q, coming to you from my mother's basement. I'm joined by my co-host P, and we're joined by special guest today, college senior and market analyst Joe Consorti. Joe, how you doing, man?
Doing well. That's I love that introduction. I love the college senior part first. Very, very true. But yeah, excited to be here with you guys.
You deserve a lot of credit for taking some time off from studying for your finals to come join us and share your wisdom with us. But talk to us before we dive into everything. Just how are you feeling with where Bitcoin's price is at, what you're seeing in a macro landscape? Where's your sort of feelings at right now?
For sure, yeah. So I'll echo a lot of what Dr. Jeff Ross has said. When I explain this, but ultimately you're seeing the side effects of a 13-year regime of a lot of cheap debt in the system. When there is this crazy amount of access to capital, companies don't have to invest it in profitable projects, right? Because they have a negative cost of capital. They have a negative required return on their projects. And so they just take this easy money. This is what enables jobs that don't actually provide, positive economic value, right? The incomes from productivity gains of invested debt don't need to exceed the debt servicing levels, because guess what? The debt servicing levels have been at or near zero. And so you're seeing what happens when the Federal Reserve, in an effort to fight inflation, they're raising, the federal funds rate, which is the interbank borrowing rate, and you're seeing the market puke, right? 15% in the last 100 days as a result of 75 basis points or 0.75% debt servicing costs. So what does that tell you? The majority of the system is propped up on this cheap, easy access to capital, and Bitcoin follows right along with it. So I think, Bitcoin is largely following what the market is doing, because in the short term, it's acting as this vehicle that's short volatility, right? As liquidity is drawn from the market, liquidity is also drawn from Bitcoin, right? Bitcoin is this 24/7, 365 vehicle where if people get margin called or they need to cover their losses in other markets, they can liquidate their Bitcoin. Obviously this is something that's going to diminish over time. Bitcoin won't have this huge sensitivity to major market moves as it becomes a larger and larger asset, right? As the liquidity in Bitcoin deepens, as market cap goes from 1 trillion to 10 trillion to 100 trillion, there won't be as much correlation to overall market liquidity conditions. So right now, Bitcoin's taking some heat as some of that bad debt gets purged from the system. But if anything, awesome stacking opportunity for me. I know for a fact that I've upped my DCAs and I've set some limit orders down to 25, 20K. So excited for it.
Love that. And honestly, low key kind of hope your limit orders never get hit, but that's just personal thesis needing to play out for sake of my own sanity. You bring up the Fed. Last week, they announced a 50 basis point hike. We now get new CPI numbers where, to what you bring up earlier, and Dr. Jeff Ross's entire thesis earlier this week was that we're going to start seeing a slowdown of these inflation numbers. Where is your head at? I mean, there's an argument to be made that these inflation numbers only look slowed down because they literally changed the formula and adjusted the coefficient before the variable for cars in this formula for this most recent CPI. So do we buy it? How are you feeling on the heels of a 50 basis point hike to see this inflation rate coming down?
For sure. So I find it funny that of course they changed the formula. I mean, that's the name of the game. Central banking is all about cheating and manipulating the numbers. I actually didn't catch the CPI print live. I slept in this morning. I wanted to get my beauty rest. But also I drank one of these Bang Energies way too late last night. And then of course you don't go to bed until later in the evening. But inflation's slowing down. Whether or not that has to do with the calculation is debatable. But I find it just indicative. It's a sign of the times that this baby hike, this very minor hawkishness from the Fed is causing inflation to slow down. As of right now, much of the inflation we're seeing is structural, right? So the only thing done by hiking, right? So basically restricting the access to capital is cutting off cutting off access to debt capital for firms that they need in order to alleviate these supply issues, right? If your inflation is caused by, which it is, it's sort of lagging behind 2 years of shutting down or restricting global supply chains, then you're not going to do any help by cutting off demand, right? Your inflation is going to stay largely the same. It might go down a little bit, but ultimately, like, all you're doing is cutting off access to capital for businesses that need that capital in order to alleviate this inflation, right? So, ultimately, what you're going to see as the Fed continues to tighten, right, through raising rates and slowing QE, which, by the way, they haven't even done yet. They haven't even done. We're still the central bank is still buying trillions of financial assets every single month, injecting this easy liquidity into the economy. You're going to continue to see what we've been seeing, which is this, system-wide deleveraging, where bad debt assets from borrowers who can't finance their debt, they get eliminated, but also the lender's debt assets also get eliminated. That's why you're seeing volatility go up. That uncertainty is driven by liquidity literally getting vaporized from existence, right? These debt assets from lenders are getting vaporized from existence. And so sure, in the short term, they're fighting price inflation, right? But as it stands, they're also contributing greatly to these global supply issues, right? And so ultimately, the solution to this will be to cease all talk of hawkishness, turn the printers back on, and essentially print money into infinity.
All right, before we dive into the PowerPoint slides, and Chris, I think we're going to start with slide number 2. Joe, you very clearly have not been watching this show, because I think ever since the Bitcoin conference, I've actually specifically called you out for drinking your nasty ass Monster energy drinks and like thinking you're being healthy with your no seed oil diet, and then let me poison myself with Bang energy. So you're a jackass. Stop drinking this shitty energy drinks.
That's totally valid. That is totally valid.
Yeah, Joe, I mean, I think you just got to go straight to huffing gasoline. I feel like that's, if you really want to rush, keep you focused.
I can't. If I like down the street, the gas is $4.55 a gallon. I know it's worse in California, but in Vermont, it's pretty bad too. So, these things are terrible for you. For everybody watching, don't drink these. I'm a black coffee enjoyer more traditionally, but for some odd reason, I decided to drink this 300 milligram caffeine drink. So.
Anyways, I want to start with the federal funds rate, that slide, because we're kind of talking about these issues with interest rates and just sort of the Fed's actions. Can you walk us through a little bit of what we're seeing here with the movement of expensive credit first?
Yes. So back in 2008, from 2004, roughly speaking, basically the federal funds rate, more broadly, what I'll call it, it's the interbank lending rate. So the rate at which banks can borrow and lend to and from one another overnight, right? And so this dictates other short rates in the economy, right? So the rates that individuals and businesses can borrow at. So I've made it a lot easier here. I've basically just put labels on this slide. So you've got expensive credit, and then less expensive credit, and then even cheaper credit. So starting all the way over at the right in 2008, basically what you saw was that when access to capital was sitting at 4.5% annualized, you started to see the S&P 500 take a pretty precipitous hit. And obviously some of this had to do with the huge leverage unwind in the subprime market, which only lasted from 2000 to 2007. Actually, in that time, the total amount of corporate debt doubled as well. So basically moving into 2007, from 2000, when the tech bubble burst, the total amount of corporate debt doubled. Meanwhile, the financing cost was at 4.5%. And you saw the S&P start to sell off because companies could no longer finance at that level, right? People couldn't purchase financial assets. They couldn't buy the S&P 500 at that level. And the companies that were within the S&P 500, weren't able to finance their debt at that level. And so you saw the Fed start to decrease rates. But unlike in 2020, they did it very slowly, right? They basically did a small rate decrease and then said, well, the market should stabilize at this level. And then it didn't, because what you saw was this massive purge of bad debt from the system. I keep saying this, I keep sounding like a broken record, but ultimately this is the same exact dynamic you see going on. Their gains from investment with that easy capital were non-existent, right? Unproductive capital allocation, because if their gains from that investment weren't exceeding 4.5%, they had to get their debt restructured, and as a result of that, their lenders, right, the people who bought these mortgage-backed securities, their assets got completely vaporized from existence. And so over the course of 511 days, you saw, the S&P drop 56%, right? So no bueno, especially companies that are largely debt financed got really hurt. So that's what you saw. That is the first time the Federal Reserve set rates at zero, right? So set short rates at zero. And then moving from 2009 all the way to 2016, right? So you had a 7-year regime of low or no cost access to capital. What does this mean for companies? Well, I'll paint the picture. If you went into a bank and they were just essentially handing you an uncollateralized line of credit, you didn't have to put up any money and you could get it for near zero cost, what would you do? Would you go out and use it productively to get gains, to your productivity and actually produce income? Or would you go buy a motorcycle, right? Would you go spend it unproductively? And so what you saw was this really easy access to credit allowed companies to borrow at a near zero cost. And so they essentially pursued projects that wouldn't have otherwise been profitable in any other environment. And so you saw this secular uptrend in the S&P 500, right? This is, I guess, the beginning of the everything bubble. And in 2008, the Federal Reserve, noticed that inflation was running hot. They noticed that they had to slow price inflation. And so what did they do? They started raising interest rates again. They start restricting that asset access to capital. And what happened? Well, you saw crazy volatility in 2017, 2018, 2019. And so the Fed pivoted, right? They went from monetary tightening to monetary easing, right? As opposed to trying to fight this inflation, they said, okay, we're hurting businesses a little bit. These drawdowns aren't healthy for the economy. We're going to start to lower interest rates slowly, right? And so at this point in time, the economy is incredibly sensitive because of the amount of debt in the system and the rising cost to service that debt. And then incredible timing, March 12th, 2020, COVID-19, right? Huge contagion sweeps across markets. Basically, there's tremendous amount of uncertainty in the system. People rush to extract their money. And so, liquidity gets absolutely destroyed. And you saw in just 35 days, you saw the S&P 500 take a 33% nosedive, right? And so in response to this, the Fed broke out the exact same playbook from 2009, and they completely eased access to capital, but this time they did it overnight, right? They did it very quickly, so as to get the economy started again. The way that I analogize, lowering interest rates, it should be like jump-starting a vehicle. It should be like jump-starting a dead battery. It shouldn't be the fuel for your vehicle. You don't drive down the road connected to somebody else's battery, and that's how you run your car. And that's how the economy has been running for the last 13 years. The economy has been propped up, not on gains to productivity, right? This increase in the price of these financial assets has been partially to increase in productivity, but mostly, right, from cheap credit. And now what you're seeing, I wrote even cheaper credit in all caps in the bottom here. What you're seeing is over the last 133 days, right? So basically since the start of the year, since December, the S&P 500 has taken a 17% nosedive in response to the Fed being hawkish and saying that they're going to fight inflation by raising the cost of borrowing, right, to 75 basis points, right? And what this shows you is that when the access to capital is restricted by 0.75%, right? You have a 0.75 price tag on the debt that you took out, and the economy takes a nosedive like this. It tells you not only how leveraged we are, right? That's a given, but how much of it was on that 0 or near 0% debt. And so as a result of this, you're really seeing financial assets take a tumble. And so in my opinion, because of this, as I mentioned earlier, a lot of it is structural, not a lot of it's based on the demand side. I feel like the Fed is going to have to pivot very, very soon, otherwise risk this being global, right? Because this credit risk isn't just in the United States, right? Raising access to capital, i.e. restricting the amount of dollars in existence, make for a stronger dollar, makes it harder for emerging markets to service their dollar denominated debts. So they have to print their fiat currency. And it leads to a global recession. And so in order to stave that off, I think the Fed's going to have to pivot. When that happens, who knows?
And I want to now switch over to slide one for the VIX, because I think that is helping to paint a picture of when or how we can set expectations for this Fed pivot. One thing really interesting that I think you did here, and I just want to have it up, the period where you highlighted right before 2009, like the 2008 window, which is highlighted on the VIX chart. And then you've highlighted the most recent sort of VIX movement of higher highs, higher lows, and just this like steady movement while the market itself during both of those periods was in a downturn. I'm curious what you're seeing, what you're paying attention to with the VIX as it goes to the public markets first.
For sure. So the VIX, you can think about, for everybody on the live stream and might not understand what it is. It's essentially a measure of implied volatility, right? Which is, you can think of it more broadly as uncertainty in the markets. And when there's wide sweeping uncertainty, liquidity deteriorates, people draw their money from the markets. That's the most broad, simplistic way that I can describe it. And so moving into 2009, we talked about a minute ago how credit was at that relatively expensive level. And because of that, liquidity gets drawn from the market. Well, the way that I like to describe what was happening with those higher highs and higher lows in VIX in 2009 and the current dynamic we're seeing is uncertainty is, it's like hiccuping, right? It's hiccuping back and forth as the Fed at one point is saying, well, we're going to go for a softish landing, or they said soft and then they said softish, which implies that they might pivot back to dovishness. And so you see basically market levels of uncertainty just hiccuping back and forth until something breaks, right? And in the case of 2009, right, that was, mortgage-backed securities, which triggered this huge deleveraging event economy-wide, which is why you saw the VIX spike there. And the dynamic we're seeing now is playing out near exactly the way that we're seeing it we saw it in 2008. Uncertainty is sort of hiccuping back and forth as liquidity is being drawn from the system, right? Which of course, less deep liquidity means more volatility. And so ultimately, something has got to give here, right? Something has got to give, or the Fed has to pivot before things get really bad, right? And ultimately, in the short term, Bitcoin is highly correlated to things like the VIX, right? It's sort of short volatility in the short term because investors are treating it like assets like the S&P 500, right? They're treating it like assets like this. But ultimately, everybody who's on this live stream knows that Bitcoin represents absolute scarcity, right? Bitcoin represents this vehicle that you can park your cash into and sit, right? Whereas something like the S&P 500 is speculative, you get in there to get a return. Bitcoin is this apex savings vehicle. So in the near term, I noticed this trend, I threw it up. Chances are we're going to see VIX blow up. And as I mentioned, Bitcoin is trading inverse VIX. So definitely I would have some dirty fiat on hand to stack when that opportunity does come. But then ultimately afterward, the Fed's going to be forced to pivot, right? Not just for the sake of our own financial markets, but for the sake of the emerging markets globally that have a lot of dollar denominated debt, right? We act as a reserve currency. It'd be deeply irresponsible to tighten in an environment like this.
What are your thoughts right now before we dive all into how this relates back to Bitcoin? Do you think Jerome Powell knows what the hell he's doing?
No, I think he has no fucking clue. I mean, I think he understands that the party has to keep going. The music can never stop. And I think that, as we spoke about yesterday, it's all about the incentives, right? Each of the people that are in these positions are very, very heavily incentivized, not only from a larger, broader economic perspective, right? Like who wants to have on their hands the collapse of the American economy, but also just from a structural perspective in the sense that, these terms are limited, right? Nobody is held accountable for decisions that they made 5 years ago, 3 years ago, whatever it is. I don't know. What is the, how long is a term for Jerome Powell? Do you know, Joe? 1 year.
1 year?
1 year, yeah. So like nobody is going to come back to him, or very few people are going to come back to him 3 years from now and be like, bro, 4 years? It's 4 years. Okay. Nobody's going to come back to him 5 years from now and basically say like, what did you do? Like you fucked this thing up. They're only going to focus on the current person. And so everyone is very, very heavily incentivized to keep the party going while they are in power, because it affects their prospects going forward. And I think that kind of explains and helps us understand the decisions that are going to be made going forward.
Very well said.
Before we get into this, like, you guys have heard Greg Foss's rant about Jerome Powell's just a lawyer, like all of this. You guys understand how like he is so not qualified to not even, let alone run essentially the global finance market by being the Fed chairman, but like even have a say in it. Like he is so not qualified. It's bamboozling to say the least. But the dude has just been like a lawyer who worked on mergers and acquisitions, and then like his boss got a job with the government and hired him, and he's just been a government lawyer. It's crazy. Yep. It's absolutely mind-boggling that like just because he knew the right person and was in the right place, they deemed him qualified, and yet he has no financial wherewithal, background, or understanding. He's never proven himself in a financial market, to say the least.
Yeah, so I think, when it comes to central banking as a whole, you see cantillionaires increasingly have, a foot in the door. And when you have connections, that's ultimately how you get a job. You don't get a job based off your own merit or qualifications. You get a job because you know the right people. And then, as the reach of the cantillionaires, right, the people who have direct connection to these money changers increases, then the quality of their performance in jobs that they're not qualified for decreases, right? It gets worse over time. You see that not only in jobs, right? You see people, working extremely unproductively, and they can still do it because of this cheap debt financing. But also you see it in architecture too, right? Fiat, at this point, it should be synonymous with societal decay, because if you go out and look at architecture now, it's, homes in, not to dunk on the great state of California, but homes that, because I was actually born in.
Watch yourself, counselor.
I'll be careful. I'll choose my wording very wisely here. I have a connection in California. I actually grew up in California for a brief time, but anyway, homes that are selling for $1.5 million, $2 million, $3 million, right, are like boxes. They're one-story boxes, right? As opposed to these beautiful, not to shill New England, right? Now I'm getting deep into it here. But these beautiful, two-story colonial homes with spires and, libraries that are a fraction of the cost, right? And so, as fiat continues to proliferate and these cantillionaires have a stronger hold on the system, the quality of life all around us, right? The architecture, the food, the Federal Reserve chairman gets worse.
Yeah, I completely agree. And just to be clear, I did grow up in California. There was a period where it was amazing, but it is a trash fire, a dumpster fire, an unmitigated disaster at this point. And I moved away relatively recently, and I've never been happier. I sleep better. I have the bags under my eyes have gone away. I've actually aged in reverse. I'm a younger man now, and all of that has to do with moving away from California. So
I filled up my dad's Suburban, which was only at like half a tank. It wasn't like empty. It was just half a tank. It cost me over $90.
Yeah. We were talking.
And
about
I went to Costco.
Mm-hmm. We were talking about it earlier, and what you left out was that for every gallon of gas you put into your car, the attendant comes out and just kicks you in the crotch in California. That's how that works. It's just part of it's one of the sort of hidden taxes that you have to sustain when you're getting gas in California.
That's
Not a lot of people know that.
Amenity, I have to say. Never know.
I'm flabbergasted. Chris, what are your thoughts? I mean, I think all of this plays an impact on the price of inflation, and yet we didn't see it this go around. Like gas prices are still above $5 a gallon here in California. Like the cheapest was 5.09 at Costco. Like that's the cheapest. And it's pretty consistently over $6. I don't see that ending anytime soon. So why then are we seeing numbers like the inflation CPI number come in and actually go down not month over month, but like last month's reading versus this month's reading?
Yeah, I know for me, like gas, I'm not going to dox where I live, but it went up to $4. And then for the last couple of months, we've been slightly below $4, just barely, like 380, 390. But now it's starting to spike up again. We're well over $4. We're like 410, 419 over the last couple of days. So, that's inflation continuing to run rampant. I think, I guess I'll tie that into inflation. Like we talk about how inflation's coming down because it was at 8.5 a couple months ago. It's now 8.3, which is their CPI basket of goods that we've mentioned on the show countless times. It's basically just they make up the numbers and they try and make it work to make it look good. But just because inflation is coming down or stalling at around the same price doesn't mean that it's slowing down, but that doesn't mean that it's still not there, in the sense that it's like, oh, well, gas is no longer going up, which is not true for me. But let's just say gas were to stay the same. It still went up over the course of the year and it's at that new high price. So it's like, have to bake that into your calculations. It's not like, oh, inflation is now 0 and now we're going back down to the lower prices. We're staying at these elevated levels, whether we like it or not. So.
Yeah, I mean, I think another thing is that to repeat what you and Joe and Q have said, even just on this call, it's, in order to understand what's going on, you have to understand the incentive structures. The CPI is a manufactured mechanic that is designed to help the Fed and everyone else manage the perceptions of the broader market, but it is not an accurate measure. It was never designed to be an accurate measure of inflation. It's total horseshit. So whatever the CPI, the printed numbers are, you have to, factor in. It's, in my opinion, it's at least 1/3 and probably closer to 2/3 higher than that at least. Yeah.
So with energy
really quickly, guys, I think this is the best time for us to do a stack some sats live because we have it under $30,000 Bitcoin.
Let's fucking go.
Locking it in. Boom, locked in some under sub 30K Bitcoin. I hope you guys did the same.
Oh shit, dog. Deposit some money.
Joe, I'd love your thoughts just broadly on how this new CPI number, while I think all of us on this call agree, like, is fabricated. There's a lot more going on behind the scenes, but can help shape the messaging for what the Fed is going to say and do. What maybe are some of your expectations coming out of this?
For sure. So I feel that ultimately inflation compounds. Okay. So, and Greg Foss says this very, very often. Love the guy. I actually made a graphic of it a while back. With Bitcoin's inflation rate, it's disinflationary. It's decreasing into infinity, right? Like this. But with CPI, right, the United States dollar inflation, if you measure with M2, it's more accurate, but from a CPI standpoint, it's increasing into infinity, right? So it increases, then it slows, then it increases, then it slows. And so ultimately, the Fed they have to manage people's perceptions, because the reality is that prices are never going down. They're just not going up temporarily. They're not going up as quickly temporarily. And so it shows you how fickle central banking is when they have to play these mind games in order for people to believe them. I ultimately think that as prices continue to go up, as the Fed becomes, more and more irresponsible, because they have to be, they have to stimulate demand, they have to print into infinity. People are going to be looking for a vehicle where their wealth is safe, right? Disenchanted lenders who have their debt assets wiped out are going to be looking at Bitcoin and saying, I'm going to park my money here and hold it in cold storage, right? Because it can't get lent out. I'm minimizing counterparty risk because I'm holding it, right, myself. And that's ultimately what Bitcoin is, right? Your asset is not somebody else's liability. So I think, yeah, the Fed, in terms of managing expectations, they're going to take this 0.2 decrease and they're going to sprint with it. They're going to say, look at us, we're doing well. Joey B is going to get up there before midterms and say, look at me, I'm slowing inflation. Inflation is down, woohoo. And I'm very apolitical since I got into Bitcoin, but ultimately they have to play those mind games. Ultimately, they're playing the wrong game here when it comes to raising rates to fight inflation, because they can say all day long that a 0.2 decrease in inflation is good for the American people. But ultimately, what energy companies have needed, and Max Gagliardi actually tweeted about this, I think yesterday, the day before, energy companies are begging for higher energy costs and lower interest rates, right? So that way they can borrow, they can alleviate these concerns, and they can get supply moving again. And then ultimately gas prices will come down. And what is the Fed doing? They're putting out all these mandates to, basically price controls to artificially try to keep prices lower while trying to restrict access to capital and slow inflation. And I have a Bloomberg terminal on my computer because at my school, they give them out to students, and I call Bloomberg support and I tricked them into thinking that I was one of the administrators from the school. So I got it installed on my computer. It's one of the best plays of all time. And so you're looking at it right now. Crude oil futures are through the roof. The price of energy is expected to go up around the board. And when you're in a regime where these companies that need to alleviate these supply chain issues don't have access to capital, it's going to get worse, right? And so they're going to continue manipulating the CPI basket to remove energy, to remove the cost of housing, because that's how they trick the American people and the world into thinking that prices are going down, when in reality, what you need to live, the prices are going up.
If I can summarize, I think what you're saying is fuck the Fed. Is that?
That would be it in the most eloquent terms. That would be the way I describe it. Yeah.
Okay, I just wanted to confirm. Got it. We're on the same page.
I'd just like to point out that, like, the cost of an Arizona iced tea, the cost of a hot dog at Costco, certain things have more price stability than, sure, Bitcoin, the US dollar, the stock market, price of gas, price of milk and eggs, even.
Some unnamed stable coins. We won't mention them here.
I was definitely getting there. Why, I guess, firstly, before we get into the lunacy, see what I did there, what's been going on those markets, what impact does this rising inflation then have to do with Bitcoin? How is it impacting the price of Bitcoin? How is it impacting Bitcoiners, besides if and when they go and actually interact with those markets?
For sure. So, inflation is rising, but it's slowing. Ultimately, we're in an environment where the Fed's tightening access to credit interbank, and then ultimately it tightens access to credit for the consumer and the average business. I got to stop holding this Bang Energy cup. I'm drinking way too much of it. And so, as it stands, the Bitcoin price is going to hurt in the near term because people have to pay down their borrowing, and especially for variable rate borrowers, as interest rates increase, they'll have to remove their liquidity from somewhere in order to pay down those debts. And Bitcoin is a 24/7, 365 liquid market. And so they're going to extract some of the liquidity from Bitcoin, which is a really silly idea for those who understand it. But ultimately, not many do. They're just in it for the price action to pay down their debt servicing payments economy wide. And so as interest rates continue to increase, Bitcoin stands to lose, right? Because it's short volatility in the short term. That's how it's traded, even though it's a long vol asset, because it's infinitely scarce. People park their money there. And so, yeah, Bitcoin stands to lose in the short term as liquidity conditions worsen. But then when it impacts the world globally at a level where the Fed can no longer ignore it, they're going to pivot and resume printing. So this slowing inflation isn't necessarily good for Bitcoin and other assets that are traded like risk on in the short term. But ultimately, 5-year, 10-year time frame, people are gonna, want to opt out of the hyperinflationary collapse of the US dollar, which is what's necessary to keep global markets afloat. And they're going to park it in Bitcoin. I'm of the belief, not financial advice.
Don't worry,
making
Joe.
my
You're
note.
still only a college senior. You're not worth enough money for someone to come after you to sue.
I just made a note in my my notes. Definitely financial advice. With
I
your
want
name
to,
next to it.
I want to, because there's something about human psychology that I think will help us maybe make a more educated guess. And where I'm going with this is the idea that, the price of gas is felt by some, but not everyone equally. The price of milk going up is felt by most, but not everyone equally. So I want to go around. I'll even go so far as to say, like, I'll start to share, like, what's one good or service in general, where if the price of it starts to go up, that really starts to impact, your day to day to a degree, or just, have an overall negative effect on your life. And in turn, what is that good or service for Jerome Powell? So we can drive the price up of that good or service, and then they will change their stance to be much more dovish. For me, pot, like, there's no reason I should be paying as much as I do already with legalized weed in California. And if those prices start going up due to fertilizer, due to increased rent, due to more legislative efforts, like, I'm a biased. And for Jerome Powell, I'd probably say something with gluten. He looks like a Chex Mix kind of guy. So I'm just going to say wheat, because I'm never going to let the idea that the wheat shortage will be the downfall of our modern society this show. I pass the mic to Joe.
One quick comment on the wheat shortage. If anything, that'll mean that cows are going to get fed with more grass, which is a win for regenerative agriculture and healthy beef. But anyway, for me, it would be
Wait. Why wouldn't it be? Why wouldn't they get fed with more corn? That's like massively subsidized already.
Well, I mean, that makes sense. Now that you point that out. Yeah, I mean, wheat, corn, soybean, they all stand to lose in the future. I'll probably crack open this free Bloomberg terminal and take a look at commodities after this and see where we're headed. I'll probably include that on this week's report. But hey, cows have ruminant digestive systems. They can eat this bad food and still it's better for you than any other meat. So I'll stop talking about cows there. But for me, it would be rent. So right now I am rooming with 3 other guys up in VT, and the rents for next year's tenants is going up by $150, which is bonkers. So right now we're paying $750 for rent, and next year's tenants, which are coming in June 1st, they're going to have to pay $900 for rent, which is bananas, because this is a college town, right? The people who are renting these places are college students. And so ultimately, what's going to happen when these college students who are guaranteed loans by the government now have higher interest payments and higher rent? It's not going to be good. Thankfully for me, I'll tilt the camera temporarily. I have a miner going over there in the background. You can see nice hash running in the GPU miner. So I'm offsetting the cost of rent by mining altcoins and converting it into Bitcoin. But for people who aren't, that's going to be bad. People who don't own financial assets, these price increases, these rent increases are going to be bad. For Jerome Powell, I think the price increase of hair plugs is going to really hurt him.
Yeah, I'll hop in here. Joe, I'll actually counter it. I mean, we've mentioned it earlier, the Federal Reserve or the government backs student loans. They're just going to start lumping in the loans that you can take for going towards housing. So I think this only just worsens the problem. Like, housing went up another $150. Let's just call it another $1,200 that is required for your living situation for the year, or whatever it is on top of whatever you were already taking out. You can take out an extra $2,000, an extra $1,200, whatever it may be. But it's only just going to exacerbate people getting further and further into debt. I guess things that I'm looking out for, I know Q is big on wheat. I know everyone's looking at energy. I think, price of beef is naturally going to go up. I think they're going to try and push the soy meats. I think Beyond Meat and Impossible Burger and all these different things are going to have quote unquote good years, because everything else gets more expensive. And then the marketing campaign goes out like, buy this stuff. It tastes exactly like beef, but they're just selling you like you guys are, we all or actually Joe, I won't speak for you, but I know me, Q, and P, we all like SpongeBob was in our era. And you know, when they have the fake Krabby Patties that have like the sludge falling out of it, that's like basically what they're trying. Like that was the joke back in the day, but that's actually what's coming for us. So I'll pass it over to P or Q.
I'll jump in. One thing, this is a very unpopular opinion, especially given like made you know, even more unpopular by movies and shows like Snow Crash. But insect-based protein is or can be super high quality. I think that we are going to live in a future where you just have your house, it's just full of insects. They're just flying around, biting you, giving you welts, like crawling into your ears at night. And then you just harvest them, you milk their little insect teats, and you get insect milk. And then you also get just a high quality source of protein. And you don't actually have to eat anymore because they just crawl into your mouth while you're sleeping. And then you're just getting that extra protein at all times. So I'm just going to throw that out there. Like, I'm a huge fan of the insect swarm inside the house. I think the thing for me that would that I would feel the most, that's a tough one, actually. I would probably say, I mean, food prices, that's the thing that I spend the most money on, probably. Or it's the thing that is like the most recurring thing, but also energy. The problem is that a lot of this stuff is so heavily subsidized. So I don't actually think that, I think that the government and the powers that be will spend a lot of effort to minimize the perceived quality or the perceived intensity of these increases. You know, I mentioned corn earlier. Corn is extremely heavily subsidized. I think the government is, again, they're just going to keep the party going as long as they possibly can, and they will manipulate it. But I think food prices are probably the thing that the most people, the most Americans, are going to feel the most extremely, and myself included. And specifically, I think insect milk. I drink a lot of insect milk. I think you know, that's the thing I would feel the most. I think in terms of Jerome Powell, I think as he, you know, greases up everybody's assholes, you know, for the fisting that he's delivering to the American public, I think it's probably going to be like oil-based lube. I think that's the thing that he would feel the increase in price in the most. I think that's the only way.
The part of the conversation where we were talking about feeding cows pot. Can we go back to that part of the conversation?
Look, you asked the question. I just answer them as I can, man.
I'm going to learn. I got to learn.
Just straight facts.
I also want to pause for a moment and like maybe expose myself for having only lived in like cities. But Joe, are you saying you guys pay $750 together or each?
Each. If it was $750 together, we'd be living in a tent, which is what I was about
to have a heart attack and text my girlfriend that we are moving to Vermont.
Yeah, no. I have it's $750 each. It'd be a hell of a deal, but I don't know where you'd be living if it was $750 for everyone.
No, okay. I mean, look, all of these are valid. I mean, what we're bearing witness to in Bitcoin, in these stable coin markets, shitcoin markets, in the public markets, we haven't really been talking about the housing market. And I mean, we can spend some time now on actually talking about Bitcoin on the Bitcoin show. Or we can talk a little bit about housing if, Joe, you have the appetite to go down that path for a brief moment, because I think it, you want to do that or you want to go Bitcoin? I'm putting it on the spot while you drink a Bang Energy.
Yeah, I got to stop drinking these things. I'm not by any means an expert in housing. So I think it'd be better suited to talk about Bitcoin.
Let's do that then. Let's go, Chris. Can we go to, I believe it's slide 3 with the Bitcoin and S&P 500 correlation? You know, my favorite thing is to always bug everyone about the correlation with the NASDAQ. Dylan Leclerc has been very good about posting updates on correlation with the NASDAQ 100 and Bitcoin on a 30-day trailing sort of price window. Joe, walk us through sort of what you're seeing with the correlation between Bitcoin and the S&P 500.
For sure. So Dylan's right to track the Bitcoin correlation to the NASDAQ, because obviously the NASDAQ is more heavily weighted towards you know, tech stocks, larger tech related companies. You know, Dylan is a master at doing things like that. The reason I did S&P 500 correlation is because right now what you're seeing is like market wide poor liquidity conditions. And the S&P 500, because it's not weighted as heavily towards those really indebted tech stocks, this gives you a better picture of what Bitcoin is tracking the entire market like. And so right now, thing I want to point out with the Bitcoin S&P 500 correlation, people are like, why is Bitcoin going down? Why is Bitcoin going down? Well, ultimately, the people with the money are the people who dictate Bitcoin short-term price, right? These huge pools of liquidity, whether it be hedge funds or large banks that take up big positions in this to hedge risk, they're the ones running the show here. And so, like I mentioned, Bitcoin being a 24/7, 365 liquid market, as the S&P 500 sells off over the weekend, these exact same people may have to sell some of their Bitcoin in order to make up for some of their lost positions in other areas. And so Bitcoin gets hurt too. Michael Saylor put out a tweet, I don't know if it was earlier this morning, I saw it on his Instagram, and it was something along the lines of, I'm going to butcher this, but in the long run, or in the short run, the people who understand Bitcoin, they don't control the price, but in the long run, they're the people who are going to make the money, right? Because where you have these institutional allocators who are buying and selling Bitcoin because they're heavily levered and they need to cover their positions, and you're seeing it right now where Bitcoin is more correlated than ever to the markets. But us plebs, on this call and people who are listening, continue stacking, irregardless of macro conditions. And so in the long run, we're going to be rewarded because we're buying at these levels, right? We're going to be rewarded because we're sitting and waiting and accumulating. And in the long run, we're going to be the ones that make the money, right? So a lot of what you're seeing now is just, institutional allocators running the show, selling their Bitcoin positions. You saw some of it with the Luna Foundation Guard, which I'm sure we'll get into. But yeah, ultimately macro is running the show right now. Me doing what I do on Twitter, I try to help people understand, because VIX obviously tracks market-wide uncertainty. VIX is channeling upwards. There's a lot of uncertainty, and in Bitcoin, there's uncertainty too. And I just want to help people try to understand what's going on, right? We don't have the liquidity to dictate markets and make things happen and push the price up. All we can do is continue stacking and understand what's going on, right? So I want to try to help people find a little bit of calm in the eye of the storm. That's essentially what's happening right now.
And so I want to highlight though, like, the importance of this correlation with the S&P 500. It goes beyond just the tech side of the NASDAQ, because you have companies outside of tech being represented within the S&P 500 that is expressing this correlation with an asset class that, while is viewed as a tech asset, is now showing its sort of correlation and its value as an indicator for what people falsely claim is the general economy. I want to really emphasize that point before we dive deeper into just the Bitcoin stuff. P and Chris, I don't know what your thoughts are on just this correlation you guys are seeing now with the S&P 500.
I mean, I don't have it. I don't have anything material to add, but I'll talk anyway. I think Joe nailed it. I think everything is tied together, because in this environment, the majority of people are viewing Bitcoin as just another asset that they are shifting value between. And when you're in that position, you're just constant. You're making determinations based on the immediate situation you're in, or the medium term, versus all of us who are making these decisions based on our views about Bitcoin, that that there will only ever be 21 million, that this is pristine collateral. And to Joe's point, I think we are the ones that will have all that value in the long term and in the medium term, but in the short term, things tend to slosh around and move together, just as everything does.
I'll add on to that. I mean, I'm class of 2020 when it comes for stacking class for Bitcoin. So I'm more of a newer Bitcoiner. That's Joe's class, is what he's saying or mouthing as well. I like to learn from the people that are more, I guess, OGs or legacy investors. I think the class of 2017 has a lot of insights. One of them that I take is, I heard actually Corey Klippstein from Swan saying this yesterday on Cafe Bitcoin in the Morning that we host and co-host with Swan. He's like, yeah, the class of 2017 sucked when 2018 rolled around and we went up to 19K or whatever and then collapsed down, because he's like, so we watched the NASDAQ hit all-time highs, the Dow hit all-time highs, housing market was booming, the bond market, you were in a good position relative to everything else. So he's like, the only thing that was getting punched in the mouth was Bitcoin, and ultimately crypto got hurt because Bitcoin runs that market overall, and all the other things are just junk. But basically he said, it's like, so imagine being like, yo, no, the guys, this is the great asset class. And then all the other investors across all other assets are just kind of flipping you off, being like, you guys are idiots. You guys bought your scam coin that they think is Bitcoin. Where I guess I'd say this time, not that it's easy. It sucks like to lose fiat denominated value or nominal value. But when everyone else in the markets are getting punched in the mouth, it really shows the uncertainty. The only thing I'd say is probably still hanging in there is real estate. But you're watching these mortgage rates. I was just talking to someone last night at the meetup, and they said, yeah, dude, I was like, oh, I looked like last week, it was like 5.1. Rates right now for mortgage rates in my area are 5.6%. When like not even a year ago, you could get rates sub 3. You could get 2.9. If you wanted to put up a little bit extra fiat for the loan to buy some points, you can get down to 2.4, 2.5. So it's just absurd. But right now, everything else is getting punched in the mouth. I mean, real estate's leveling off for sure as rates are hiking up faster than I've ever seen in my life. And yeah, I mean, NASDAQ's down, Dow's down, S&P's down, bond market's crashing, Bitcoin's down. Because of that, crypto markets are down. We're watching Luna blow out. So like, we're not in good times, but I guess we feel like we're the life raft when everything else is blowing up. And my conviction grows every day with learning more and more about Bitcoin. I'll pass it over to Q or Joe.
Yeah, I mean, look, it's definitely very trying times. I think this is when, convicted people will really step out and show their conviction and follow through on it, while those less convicted maybe will wait idly by before diving in. Trash is taking itself out. I've been putting off having this conversation. I've waited very patiently to ask you about slide number, where is it? 4. Let's talk Luna. We talked a little bit about it just now with what Chris brought up. I was alluding to it when I was bringing up how, a hot dog at Costco is still $1.50. A can of Arizona iced tea is still 99 cents. And Luna, which was supposed to always be 1, is now God knows where. Walk us through, Joe, if you don't mind, maybe explaining the financial mechanics behind how this was supposed to operate.
Can I just jump in real quick? And the story about, I forget if it was like the co-founder or the CEO of Costco was meeting with like the board or something. And they were like, yeah, I think we're going to have to increase the price of these hot dogs. And he like stood up and he was like, if you increase the price of these hot dogs, I will kill you. And we're like, okay.
He literally was like, you can raise the price on anything else, but a hot dog better not be more than $1.50.
They're taking
that's the type of leadership we need.
Exactly.
But the stable coin is, I believe, now under 50 cents or just about at that level.
Something like that. So I will, I'll do sort of a broad overview of this. One of the reasons Bitcoin was created, following 2008, obviously there was, development in the broader cryptocurrency space. That word has been totally trampled on by the thousands of alternatives you see that are, ultimately just a product of easy credit seeking yield. But one of the reasons Bitcoin was created, and one of the things you can do with Bitcoin that you can't do with any other asset other than gold, is that you have no counterparty risk if you're holding it on your own, right? And as a result of that, right, it's a check on fractional reserve lending. You can have this asset that people allocate to, and if you're holding it in cold storage, guess what? It can't be lent out. So it's sort of a check on fractional reserve lending that was sort of what caused Armageddon in the financial markets in the 2000s. Luna and Terra, it's totally antithetical to that, or it's totally antithetical to Bitcoin, right? It is maximum counterparty risk. What happened with Luna? Over leveraged lenders got caught with their pants down. That's the simplest way anybody can say it. So you see these TikTok investors, essentially, they post up videos of how they get 20% APY. Do you want to know how they can get that crazy yield that you can't find in other financial markets? It's because they're lending out your entire deposit. 100% of it is being lent out, right? And I don't know that for certain, but ultimately, that's what causes these huge this huge sell-off when there's a run on the bank, right? This idea of yield farming is just another way. It's a fancier way of saying savings account. Except with a bank, I tweeted out yesterday, my savings account earns 0.025% yield year on year because they're not lending out the entire thing, right? Because the Federal Reserve is letting them print money into existence and create dollars through lending. These people, these unregistered securities that don't have lending licenses, that aren't traditional banks, they're lending out your entire deposit to capture yield. And so this digital bank run that happened, where investors, withdrew their cash that was actively being lent out, that caused Luna to force sell their Bitcoin reserves in order to meet those obligations because they didn't have any of it on hand, right? It was all being lent out. And so ultimately, leverage lenders, right? They cause liquidity issues when many people all at once run to withdraw their deposits. And in my opinion, lending 100% of these deposits caused this flash crash. They were forced to liquidate all of their Bitcoin to retain the fact. You can see this chart here. If you flip it horizontally, counterclockwise, it actually looks like the Chad hair, the face of the Chad meme. And one thing I'll say is that markets like these humble people who think that they're Chad, and it's just a very funny chart that in 4 months, this thing completely buckled in on itself. Adam Back called this, right? Where is this liquidity coming from? It's coming from your printed out of thin air Ponzi tokens, right? So as long as depositors keep depositing and not withdrawing, that's how these yields continue. That's how these returns continue. Do you want to know what that sounds like? That sounds like a Ponzi scheme, right? As long as you can find more people to lend to you and you can lend to others, right? It's fantastic. The music doesn't stop. Everybody loves their 20% yields. But as soon as any negative catalyst happens, right, and there's a run on the digital bank, there's a run on Luna, and people rush to withdraw their assets, Luna is forced to sell off all of their Bitcoin reserves in order to meet those obligations. And all of a sudden, Terra loses its peg. Luna goes from, crashes 96%. That's what you see, right? Ultimately, lending at many multiples beyond your reserves does this, right? And that's my understanding of it. I won't claim to be an expert, but this is the idiocy behind fractional reserve lending, right? The music doesn't stop as long as people keep depositing, right? So you can continue lending out and providing these obscene, unrealistic returns. And that's why it's so important to get your Bitcoin off exchanges where they can do the exact same thing to you.
Do you I have Do Kwon's thread that he posted essentially issuing sort of what the plan is going forward, more or less, without diving into too many details of it, explaining that there's probably some more unwinding to be done, but the algorithm itself should eventually correct. How much credibility do you think is left within that project? Do you think it's going to go to zero? And what effect does that have then on Bitcoin overall?
That's a great question. Dennis Porter said this 2 days ago on Spaces, and he tweeted it out, and I couldn't be more. I couldn't agree more with what he said. It's that this situation of this Ponzi company holding Bitcoin and dumping it onto the market, causing this flash crash, is going to be a catalyst that Janet Yellen and the boys are going to run with. They're going to run with this as an example of why the market as a whole is speculative and unsafe, right? They're going to run with that. And so ultimately for Bitcoin, right, because they'll bundle in cryptocurrencies with Bitcoin, it's negative in the near term, which is unfortunate. But I think the damage to the credibility of Luna and Terra is irreconcilable at this point, because there's not going to be any bid. Nobody's going to want to say, apart from KSI, I saw KSI tweeted out that he bought 100,000 Luna. So good luck with that, Mr. KSI, if you're watching this. But ultimately, there's literally no bid for this thing. It just goes to show that, you know, your 20% yield ultimately, you know, it's not going to be able to be redeemed, because as everybody rushes the market and demands their money back, it's literally not there, right? And I'm happy that this huge deleveraging, all this bad debt and assets getting vaporized from the system happened when Luna only had roughly 80,000 Bitcoin, right? Imagine what would happen if people continued buying this Ponzi stablecoin, and then their value of their Bitcoin reserves kept going up and up and up, and then they had to dump 100 or 120,000 or 200,000 onto the market. And obviously, Bitcoin's a relatively healthy market. Plebs like us set limit orders, we're able to absorb it. But I'm happy that this experiment of backing a stablecoin with Bitcoin died very quickly. Otherwise, it could have had much more deleterious effects. But for the credibility of Luna, I think it's no longer there. I don't think it's coming back.
Two things. One, I love the band name, Janet Yellen and the Boys. And two, the voice, the impression you just did was incredible. Can you just give us a little bit more of that gold content? You know, like say insect milk is a fundamental aspect of the food pyramid and the American economy.
Insect milk, you know, it's a fundamental aspect of the food pyramid.
That may not have been very, but one thing you can see, I don't know if you guys follow Carney Clemenza on Twitter. If not, I'd highly recommend you do. I did a Klaus Schwab impression and he retweeted it. And I think what I'm going to do in the next couple of days is I'm going to find some sort of app that lets you face swap. And I'm going to do like a Klaus Schwab sort of video where I do the impression of him. So
yes, please.
Only if you wear that like ridiculous outfit looking like a Sith Lord with that like leather, whatever it was that he was wearing at the podium.
His robes, iconic.
Guys who are guys and gals who are watching on YouTube, smash that like button. If we get to 100 likes, we start releasing stats through the Carrot app. So smash the like button. We'll be dropping free stats in the chat hopefully soon. I want to present a question to everyone, and we'll all answer it. I'm going to answer it last this time. And I'll admit, like, it's an idea that Udi kind of posted about, where he took the counterpoint to Corey's very aggressive attacks over the last 48 hours on Do Kwon and Terra in particular. But he essentially presents the question of, how is what Do Kwon and what Terra did any different, where they issued some sort of a security to then turn around and go buy up Bitcoin with it and essentially got margin called? How is that any different than MicroStrategy issuing bonds to go out and buy more Bitcoin and using their Bitcoin on their balance sheet as leverage and collateral for said bonds or for those loans that they take out? Like, where's the difference here? Are you more comfortable with Saylor because we all just like bow down to Michael Saylor, or is there actually logic, rhyme, and reason?
So I'll hop in here really quick and give my 2 cents. So with MicroStrategy, you have an actual company that has a service they provide with actual cash flows, right? And so they're fundamentally sound. And in the case of both Terra / Luna, whatever, and MicroStrategy, both of them purchase Bitcoin in order to actually go ahead and put it in their reserves. With Terra, they did it with equity financing, right? And so they went ahead and bought their Bitcoin with their own money, which you know, I think it might have been wiser to take their Ponzi coin and post it as collateral to get debt financing, because then what you'd be able to do is you probably wouldn't have been able to see this huge crazy dynamic of 80,000 Bitcoin having to be sold onto the open market, because Luna would have been able to just sit and wait and then reaccumulate over time. With MicroStrategy, I think it's a lot different from the standpoint that, like I mentioned, their company, they're sound, they have cash flows, but also they pursued debt financing, which won't be due until, I'm not entirely sure, 2026, 2028, and they have it staggered far out into the future, right? The maturity on these bonds is extended far out into the future. And I believe Saylor said yesterday that their essential margin call price before they have to post more collateral, of which they have tens of thousands of more Bitcoin to post as collateral in that event happening, is $3,000. So I think what you saw was with Luna, somebody trying to sort of be the puppet master and issue tokens out of the open market to get liquidity and buy Bitcoin, with no fundamental backing behind it, no real strategy in the event of getting margin called, except for just pontificating and saying that it couldn't happen. With MicroStrategy, you have a team, you have somebody who understands it very, very deeply in Michael Saylor, who made sure that the levels at which they were borrowing and the rates that they were getting and the maturity at which these bonds were issued was such that they'd have the lowest possible chance of having to sell this Bitcoin if they got margin called. So those are my 2 cents. I think there's a lot more intellectual rigor that went behind MicroStrategy's purchase of this Bitcoin than with Luna.
P, what are your thoughts? Do you think it's inherently different what Terra and MicroStrategy are doing as far as trying to accumulate Bitcoin?
I don't have an intelligent thought about it. I haven't really thought too much about the specific nuance there, but it does very much feel like the Luna Terra acquisition strategy was more nefarious, was more duplicitous. But unfortunately, I don't know enough to be able to give a really intelligent answer. But I still did.
Those were good words. I like both of them.
Used words in a sentence.
I opened my mouth and words came out.
Gold star.
You're welcome.
Yeah, I think I'll add my 2 sats in. Yeah, I mean, I think it's just like if you're a Ponzi scheme and you're borrowing against that Ponzi scheme to buy more Bitcoin, that's going to unravel a lot faster than if Apple or MicroStrategy or any company that I guess has more of their worth, they're generating cash flows, they can push out their debt much further. I mean, I guess in a way, Saylor offering bonds that if they come due and he can't pay them, I forget, Joe might know this better. I didn't really look into the bond offering that much, but I think, is it tied to the equity of the company that if they default, or is it tied to the Bitcoin if they default? I forget which one it was. Q, I don't know if Q or Joe want to answer that one.
I think for the bond, it was actually the equity of the company. And then for the most recent loan, they used the Bitcoin. So they've actually, like, I don't want to cut you off, but go ahead, keep going.
Yeah. So in that case, I mean, I guess if they default on the first one that they offered or one of the first bond offerings, you would get equity of the company. So they default on their payment, which you would hope that they would cover with their cash flows, that they're not already buying Bitcoin, and they would pay the bond back in fiat denominated debt. If not, the people basically get based on, I think the way the order book works is the person that has the most debt goes first, and then you go down the debt order. Obviously, if they can't cover all their debt obligations, then they have to file for bankruptcy, and there's a bankruptcy proceedings and all that. I'm sure it's much more than that. And then the most recent one is they're collateralizing their Bitcoin. So if they default on paying that loan back, whether they get margin called and or they are not able to pay it, then in that term, they would have to defunct and give some of the Bitcoin that was, I'm assuming, double collateraled or, 50% loan to value. And it's not like they went, like they took all their Bitcoin and leveraged up on it. It was just a small portion relative to it. I think they took 120 million, 100 million, somewhere around that amount, but they have 4.1 billion in Bitcoin total. Okay, get over to Q or Joe.
So I'm going to combine what Joe and what Chris, you guys kind of talked about, because it is vastly different in my mind, because ultimately you have a company that is regulated through the public markets. Like whether or not you agree with regulation, whether or not you agree that the SEC or the Fed or anyone in general knows what they're doing when they put rules and regulations in place and then try to uphold those rules, those guardrails actually help to provide a framework of where expectations can be. And without those expectations being set, I don't think in this attempt to build out the stable coin, like P, you may be able to speak to this, like when you code out something to try to build a website, for example, you try to figure out all of the worst case scenarios. What are like the pain points. Where can this be attacked? Where can this fail? And how can this fail to prevent those? And then you don't necessarily have to worry about like the best case scenario. The best case scenario is someone uses it the way it's supposed to be used. And unfortunately, when you create these rules and regulations, you're essentially creating those guardrails against the worst case scenarios. But they didn't do that with Terra. And so as a result, they were so much more focused on how the upside works, how it's like, this is gonna just like, it's gonna work. And these are the reasons why it's gonna work. Well, you didn't break down why could it fail. And because you didn't think through why it could fail, it failed for those reasons. And ultimately, MicroStrategy still owns property. MicroStrategy still owns software. They have other cash flows coming in. And I hate that argument or that side of the argument. But we brought up a couple of weeks ago how MicroStrategy is technically right now trading at a discount compared to all of the Bitcoin it has on their balance sheet. And I think due in large part, it's just the market volatility. Everything's on a drawdown. That's an overcorrection. That's not to say it can't go lower. So I think, unfortunately, the market is like hiccuped a little bit. And I don't buy into this notion that just because they issue debt to go out and buy Bitcoin, MicroStrategy is doing the same thing as Terra. MicroStrategy is playing within a field and a game that has protections both for itself, its company, and then its shareholders. There's no protection for the people who hold Terra or Luna. You're just a bag holder. So I don't know if anyone wants to add anything to that before we move on.
Well said.
Cool. So moving on then to now focus more so on Bitcoin and on-chain stuff. I want to first start with the Mayer multiple, slide 8, please. And so right now, Joe, I believe, correct if I'm wrong, the Mayer multiple is, I don't think I'm reading this right. Can you help me, Savvy, and tell me what I'm reading on this chart?
Yes, absolutely. So for everyone listening, the Mayer multiple is essentially just a way of measuring whether Bitcoin is overbought or oversold on longer timeframes. And the time frame we're talking about is the 200-day moving average. So essentially, the Mayer multiple is calculated with the spot price of Bitcoin, which is hovering at 21,000, with the 200-day moving average. And so as of right now, we're cresting a Mayer multiple of 0.8, right? So the Mayer multiple being 0.8, and Bitcoin's that essentially means that Bitcoin spot price is lower than the 200-day moving average, right? So what does that tell you? Well, we just talked about the uncertain macro backdrop. We just talked about how Bitcoin is being sold to, essentially cover margin calls or post collateral or whatever in other areas of the financial markets. And so Bitcoin is being sold off pretty precipitously right now, right, relative to its 200-day moving average. And one thing I'll say is that Bitcoin has, you can see on this chart, we flirted with that 0.8 lower oscillator. To make it easier, you can just take a look at the very bottom. I know the oscillators map against the price up top. There are a lot of moving lines, but you can just think of the pink line as overbought and the green line is oversold. We've been flirting with that 0.8 oscillator for quite some time now, or I should say level oscillator is relative to price. And every time we've dropped below that level, there's been a pretty great generational buying opportunity. I don't know who coined the phrase. I've heard it from Dylan, generational buying opportunity. But ultimately, in huge sell-offs, when everybody's running around screaming, panicking with their heads cut off, you can take advantage of the fact that based on the Mayer multiple, we're relatively oversold right now, right? And that's justified because of tightening liquidity and market conditions where bad debt assets are getting vaporized out of the hands of lenders. But also, you can take this as an opportunity to say, I'm going to stack corn at these cheap prices, right? Every time we've dropped below this oscillator, you've had the ability for, in the case of 2018 and 2019, for a decent portion of a year, right, to stack corn. In the case of the 2020 flash crash, like 30 days, right, to stack that cheap corn before we ran up. And funnily enough, each of these also sort of coincide with when the Fed chooses to pivot, with when the Fed chooses to slam rates back down to zero. So in a way, if we're connecting all of these big moving pieces, you could see the Mayer multiple dropping below 0.8 as a signal that the wider market, in terms of liquidity deterioration, is really reaching a breaking point, and the Fed may not be able to get those 9 hikes in that it wanted to, might not be able to tighten credit as much as it wants to. So I'd be very much excited to stack at these levels as we get more blood before the Fed pivots, and then we resume number go up.
And so I'm genuinely curious your thoughts. Like, I'm putting you on the spot. I recognize that with this question. I've been a little concerned that a lesson we haven't really learned recently in Bitcoin, as far as it concerns oscillators, is when things look overbought or oversold, they could still be more overbought and more oversold. So I'm genuinely curious if there's now a second sort of indicator that you're coupling this with. Like, that's what I like to use in stocks. Like, I won't just use one indicator. I'm curious if there's another one that you're paying attention to as well. Obviously, the Mayer multiple is telling us like right now is the time to buy. But in all honesty, it's not actually telling you this is the bottom. It's just saying, hey, price for the value of what it's trading at relative to what it's trading at historically, this is a great opportunity.
That's exactly right. Checkmate says this, the lead analyst over at Glassnode, which is the obviously the platform I'm using for on-chain data. Oh gosh, I think wait a minute, hold on. Did he say this? I totally lost my train of thought there. Oh no, I know what he's talking. So here's where I want to go with this. So these indicators, because of the way that on-chain works, you could look back through the entire history of every single Bitcoin transaction, the entire blockchain, take a look at UTXOs, and you can make these indicators based off of that, right? So looking in the past, you can see that, hey, when we got to really overbought levels, Bitcoin's price dropped. When we got to really oversold levels, and we eventually bottomed out, Bitcoin's price increased. And so, you know, these on-chain indicators became visible to the public around 2018, 2019. So now that they're visible, people might be trading against these indicators. Everybody might be using these indicators in order to trade. And because of that, it's sort of, a self-fulfilling prophecy. And over time, as these indicators proliferate, they mean less and less. And so you're absolutely right to say, just because something happens, doesn't mean it'll happen again. Right. That is the biggest fallacy in the history of financial markets, that, oh, the good times are rolling. It's 1927. Let's continue dumping our money into the stock market at multiples that are well beyond the actual valuations of these companies. And it's the same thing here. We see Bitcoin is relatively, I say relative because it's relative to the last 200 days, oversold. You're exactly right when you say, doesn't mean we can't fall further. Right. And in my opinion, we will fall very much further. We're about to see some real blood in financial markets. And sure, these indicators can be back tested, but it's not as if they're the be all end all. And so ultimately, the more cogs you understand in the wider market, the better you'll be able to position yourself. But ultimately, these are just predictors. Who knows what's going to happen? Against all the Mayer multiple means is against the 200-day moving average, the spot price is lower than it. Doesn't necessarily mean we can fall further. Because, again, people have this expectation that what has happened will continue to happen, and it's almost never right. So
I'm curious if we can now move up one slide to the realized price. Talk to us a little bit, because we had Sam Rule come on Monday, and he had shared sort of the realized price hovering around $24,000 could be sort of a level of support down below once we break below 30K. First, talk to us a little bit like what is realized price, and then what you're seeing in this chart.
For sure. So realized price is essentially, you can think of it as the price at which UTXOs were last moved. The translation of that would be, it's just the average cost basis of all coins on chain. So you can think of in aggregate divided by the amount of supply. This is the price at which, coins were purchased, average, right? And right now it's at $24,500. And so you can see this as sort of a level of support. As on average, the network approaches its purchase price, people are more inclined to buy at that level. And as we dip below that average purchase price, you can see historically we've spent very little time underneath it, because as people are underwater, some people capitulate, but some people also see it as a crazy buying opportunity. So that's why realized price serves as something like a floor, because it being the average price at which coins on the network were purchased, people are more comfortable to say, okay, I'm going to buy at this level, right? And I feel realized price is potentially a good indicator for that. We could fall through, the floor, because again, this is simply an indicator. It's not a be all end all definitive thing. But as of right now, I'd be taking a look at this and lending some credence to it. I find this indicator absolutely fascinating, because it's obviously this is an exponential graph, right? And it's moving sort of like a stepwise function through time, right? So it essentially removes all of the volatility, right? It's very, very beautiful looking at it like this. You talk about signal and noise, right? The difference between those two. I feel noise is the intraday volatility. Traders who look at the 1 hour time frame and don't zoom out, and realized price is essentially bunching these UTXOs together and saying, hey, take a look, this is what everybody purchased at, right? Chill out. On a long time frame, number go up. So I would also say that this is a pretty definitive support level. Mitch Klee tweeted out while we were just talking here that he showed Bitcoin's volatility through time. And I'd encourage people to go follow Mitch. But through time, as the liquidity in the market deepens, volatility has been going down precipitously, right? Because that sell side can get absorbed much more effectively when there are more people willing to purchase, right? The deeper the liquidity is, the less volatile it will be. You have people like Peter Schiff who regularly attack Bitcoin for its violent upswings and its violent downswings and me, gold, I love yellow rock. But this realized price and the idea that Bitcoin's market cap is increasing into infinity as it absorbs these overvalued equities, as it absorbs these negative yielding bonds, as it absorbs the time and energy of people who can't save in their hyperinflationary currencies abroad, then volatility decreases, and realized price is a beautiful way of visualizing that. So long and the short of it, I say things in a very absurdly long way. Realized price is a pretty good floor.
I mean, look, I will say this, looking at this chart makes my stomach churn a little bit. Like, this implies that we have a lot more downside to go. Not only can we very safely break the realized price level, but we can still go well below that, and Bitcoin can be acting as it has historically speaking. I'm curious how much weight, if any, we need to put on like realized price, however, being a true area of support. Just through my initial look through of this, ever since this period in 2015, where it looked like it was an area of resistance for some time, literally right above the A and the first S. After that, it doesn't look like we really traded with or alongside, maybe like slightly above or slightly below. Joe, you're snickering at me. So what are you thinking?
Oh no, I'm not. I'm just emoting as we go along. But what I will say is that you're absolutely right. There is potential to go well below this. And what I'll say is ultimately, like, there's no resistance and support exist, but all they are indicative of market participant psychology. If you drop below your cost basis, if you drop below that line of your cost basis, you're more inclined to buy. Or you're more inclined to sell, right? And depending on the psychology of participants, that varies. And same deal with when you're well above your realized price. You feel like what's happening is going to continue, and so you buy, and then all of a sudden you're too overheated, and you have that reversion to the mean. So ultimately, like, looking at this is just, and on-chain in general is just a way to assess buyer behavior and overall market sentiment based on how coins are trading, historically. And so in 2015, we talked about 2016, 2017, 2018. That's when the Fed, and into 2019, that's when the Fed began their rate hike cycle. And early on, it was fine. The market was reacting fine. Bad debt was getting purged from the system. But over time, you saw that those debt servicing costs expand a little bit too much, and then the entire market got a little bit hurt. And then obviously as they started decreasing again, housing did well, equities did well, Bitcoin didn't do well. And that's a function of not a whole lot of liquidity in Bitcoin. So I wouldn't lend any credence to any particular on-chain metric. If the Fed continues hiking and continues being really hawkish with their tightening, we have way more room to fall, right? And I wouldn't say that realized price is a comfortable floor at all. We could fall even well below the last cycle top, right? In 2017, we have the ability to fall below 21,000. It's all really a matter of the way that the Fed decides to move, whether they decide to pivot and expand access to credit because they realize it's not going to fight structural inflation to halt demand, or they keep on going and then asset prices, including Bitcoin, get hurt. And in that case, we could fall well below realized price.
P, what are your thoughts on all this astrology that's been circulating for the last few minutes?
You fucking bears. No, I think that that it's all super interesting to me. I think it's almost impossible to predict what's going on. I find a lot of the analysis to be super interesting. I think it has the potential to inform decisions that are made, but I think a lot of it, to be honest, is reading the tea leaves. Now, maybe that's just because I'm terrible at doing it. But I think a lot of I am continually fascinated by on-chain metrics, and things like realized price, because to me they represent a solid anchor into what's going on. It's impossible to predict, as as just been saying, with any certainty what's going to happen, but I think they can provide interesting. I don't even want to say pointers, but frames of reference to interpret the action that we're seeing.
I said I was going to school to become a finance guy, an economics guy, study macro, but more and more I get into on-chain, the more and more I become more of a market psychologist, because that's ultimately what it is.
No, I say no.
Oh, I got my degree.
And part of that for me is like, it's frustrating to me. I want everything to be based in like logic and like here, but nothing is. Of course, we're humans. We are emotional creatures that make decisions based on emotion. And as much as I like to make fun of like the fact that like the term animal spirits is an actual term that people talk about when they're talking about the markets, like the animal spirits are scared, they're angry, like they're strong, they're weak, and I'm like, what the fuck does that mean? But
I can't wait to take P to New York and make him rub the bull's balls.
Oh, I'm so down. So down. I'll sign them and then immediately get arrested. But yeah, I think it's all grist for the mill. It affects how other people make decisions, and thus that affects the market price, and thus that affects the reality.
There's a way of market behavior quantitatively, which is, I guess, what we're doing here. Then there's also a way of assessing market behavior more. I don't even know the adjective to use, but you saw, I can't remember who it was, but somebody was using like literal astrology just to predict how the market would move. And it was accurate like 4 or 5 times. So ultimately, like, it's all human behavior. We're all emotional beings. If we were all perfectly rational, we would see realized price and say, this is the average cost basis of all coins on chain. This means people are going to buy at this level. But ultimately, that's not what it means. I wish it was that way as well, but in a way, I guess to find the fun side of this, it's more exciting. So,
yeah, and also I will say, like, if that was the reality, then there would not be opportunities for information arbitrage, or rather, there would be far, far less of them, and they'd be more concrete. I mean, there is a lot of, as you said, fun and excitement in trying to understand, how things are going to go and profit.
I do think it's worth noting, like, Joe, sorry to be the bearer of bad news about this, but like, as you spend more time learning, understanding, and studying financial markets, what you come to realize is everything about financial markets is really just understanding human psychology. And everything is rooted in human psychology. It's why I love technical analysis, not as like a tea leaves forecasting method, but more just like to help set expectations. So I would caveat and say these things are helpful for expectation setting, so long as you're not using it as the letter of the law.
and kind of understanding the psychological principles that go behind certain things like price movement, like why there's such thing as support, overhead supply, like understanding the psychology of what a flat base is and a cup with handle for those who like actually spend time looking at a stock chart and look for chart patterns, like helps you better understand what is a more viable chart pattern versus others. And again, it's not about, oh, this chart pattern guarantees this type of a return. It's more of a, hey, these are expectations, and you can sort of fountain it down to say like, hey, I'm like 75% sure this is sort of a range that we can expect. I'm like 60% sure it's here, and then like 20% sure this is going to happen. Yes, I know those numbers did not add up to 100%, but that's fine.
Because again, we're talking about human psychology here. This isn't based in logic. Percentages are a tool of the man to keep us all down. So we got to break free of our shackles.
Trolling me, but again, like to explain it from a like truly analytical statistic, like understanding it's each of these events is independent. Like if I think a stock is 70% likely to go up $10 a share, that doesn't mean that its likeliness of going up only 5% is impacted by those other odds. That's now independent event. So each of these possibilities has its own percentage out of 100. So it is P. I know you said it's not, but it is actually all rooted in logic if you know what you're doing.
I will buy your Bitcoin at these low prices.
Same. But I do want to go to sort of a more traditional understood thing, like the thing that made sense to me, which was supply and demand, and based on supply and demand, why Bitcoin will succeed. Supply 21 million. We all know that. We know that to be true. And what is demand? And people have a variety of ways of calculating this, whether it's open wallet addresses, whether it's active users, whether it's the daily active volume or total number of transactions on Bitcoin, whatever that is, different people like to use it. Joe, you actually have a very interesting one, in my opinion, with slide number 9 of addresses with a balance of more than 0.01 BTC. So more than 1% of a Bitcoin, 10 million Satoshis. Firstly, why this versus just general wallet?
For sure. So I think this is a very, very valuable metric to follow when it comes to like tuning out as much of the noise as you possibly can and understanding adoption. This is probably the best you can get. And the reason I picked 0.01 was a bit arbitrary. It's because yesterday it hit an all-time high of 10 million addresses. Never hit that before. And so as of yesterday, it was able to hit that, right? So the amount of not unique entities, but addresses with a balance of at or over 0.1 BTC is 10 million. And so non-zero balance addresses, such as addresses in general, they also are at around 41 million. But ultimately, the reason I put this up here was because we've talked for an hour and 36 minutes roughly about the idea that the macro environment is going to shit, and that central banking, ultimately their solution will be to ease liquidity conditions, allow people to borrow, and really ultimately hyperinflate the currency into infinity. For the layman who doesn't own any financial assets, they need to park their wealth somewhere where it's definitive, right? Where they don't have counterparty risk. Their reserves aren't getting lent out. They have no dilution risk. Their proportion of the terminal supply, 21 million, it's always going to be there. So they are placing their trust in infinite scarcity, right? Over time, as the liquidity in the network deepens, it's a vote of confidence that regardless of the uncertain macro backdrop, people are voting with their dollars to park it in infinite scarcity. With overvalued equities that are trading at many, many multiples to their actual earnings, right? As these things continue to lose value day in, day out, people are going to begin questioning, why is this happening? They're going to understand lending dynamics. And wait a minute, you're telling me that dollars are lent into existence? You're telling me that these companies have borrowed at 0% and we're investing in these purely as speculative vehicles? I'm going to park my wealth in infinite scarcity. That's where I'm going to place my trust, right? People whose bond yields, right, across all maturity, across all duration, they're earning a negative yield, right? CPI is running hotter and hotter, right? And it's slowed by 0.2%, but regardless, they've got negative yields, right? Their coupon is non-existent, right? Their par is deteriorating as people sell this thing off, right? And so what are they going to do? They're going to place their trust in infinite scarcity. And so the reason I put this up is just to show that, a lot of people will debate, well, when is Bitcoin going to be successful? When is it going to, really reach escape velocity? We've reached escape velocity. We have. I think price action driven by macro foolishness simply doesn't bear that truth yet, right? It doesn't showcase clearly that Bitcoin is the apex asset. And I use this translation from my Italians. It's a very porous piece of bread, infinitely porous piece of bread that's soaking up all of the fiat that is olive oil. And there's infinite amounts of olive oil that the waiter is going to keep bringing out, and this bread can keep soaking it up. Price action doesn't reflect that this is the apex asset yet. So like P was saying, take advantage of this imperfect information, right? While prices are still this low, while it hasn't absorbed all of the asset value in the world, take advantage of that. As of right now, 10 million people have to the tune of at least 0.1 BTC, and it's only going to climb.
So why 0.01 and not something more like I think it's like 267,000 Satoshis? That would be the equivalent distribution of 21 million Bitcoin to 8 billion people. Why this 0.01 versus something like that?
It was just an arbitrary decision. I was ripping through the Glassnode charts, and I saw, wait a minute, this just hit 10 million. So I feel like the visual of a line going up and to the right would be the easiest for most people to digest and understand.
Got it. I mean, P, what are your initial thoughts on? I buy into this idea that wallet addresses and more users coming onto Bitcoin, more people holding Bitcoin is what's actually driving demand. I don't know if you maybe think something else drives demand though.
My intuition is that it does as well. I mean, I know that Glassnode has some pretty advanced heuristics for figuring out like what is a new user versus just a heuristic or a hierarchically deterministic wallet address. But my intuition is that it's new users, coming into the network.
See, I would have used one of those more advanced metrics where you could see like unique entities in order to like actually evaluate unique user adoption. But I don't have the capital to pay $700 a month for the premium plan. So here we are, tier 2.
You couldn't figure out a way for your school to pay for that Glassnode's sub? Come on, bro.
Hey, maybe what I could do is I could install the Bloomberg terminal on a virtual machine on my computer and then sell that at a discount to an actual Bloomberg terminal to somebody who wants it, then use that money to pay for Glassnode because TradingView is cheaper.
There you fucking go.
And we just lost your. No, I'm kidding. One last slide I want to go over, slide number 5, Bitcoin exchange net flows. We're talking a lot about these wallets opening, but we're also seeing an influx of Bitcoin on, and I believe leaving exchanges, if I'm reading this correctly.
Coming on to exchanges.
Coming on. So people are dumping their Bitcoin then. So
when it comes to people, basically we've seen 78,000 Bitcoin of net exchange inflows over the last 2 days. So that's just a combination. It's just the difference of like who's winning. People who are putting their Bitcoin on exchanges, which is the green. People who are taking them off, which is the red. And lo and behold, Do Kwon and the Luna squad, they dumped 80K Bitcoin, with a market maker in order to buy fiat and retain that peg. So you've seen 78,000 Bitcoin of net exchange inflows. So you see the power of people converting their Bitcoin to cash when they're this huge holder like Do Kwon. So they dumped it onto the market, converted it to dollars. This is actually the 3rd largest daily inflow wick of all time. I didn't zoom out all the way. I wanted to keep it more granular, less granular. Not entirely sure. The Bang energy is wearing off. But it's the 3rd largest daily inflow wick of all time. And so we haven't seen this much inflows since the March 2020 flash crash. So you can see there. And it's funny that what caused this amount of inflows was another flash crash, but it wasn't Bitcoin. It was this Ponzi coin. And so I actually put a lot of weight on a liquid supply, which I don't actually have the ability to take a look at, but supply that's or excuse me, supply that's off exchanges, so like exchanges or money flowing off exchanges, Bitcoin flowing off exchanges. And as of right now, now I'm considering, wait a minute, that metric might not have a whole lot of weight, because we see that just as quickly as money can be extracted from exchanges and held in cold storage, it can be put right back onto exchanges and liquidated into dollars.
So if I'm reading this chart correctly, then that means if Luna was not doing this, we would actually see this in the red, signaling that more people are sending their Bitcoin off of exchanges, correct?
Because they liquidated 80,000 Bitcoin, I would say that, yeah, we would see this in the red. I don't know how large or slight that would be, because you've also got other people in response putting their Bitcoin on exchange. But yeah, conceivably we'd be in the red. Yeah.
No, I think it's really important for us to like hammer this point home about how much of an impact these like big movers really can have on even just Bitcoin on-chain analysis metrics, but broader metrics as well. Like you brought up earlier, and I fully believe and buy into, the reason we see correlation in Bitcoin versus the public markets is it's just being treated like an asset class by money managers that don't necessarily have to have a fund in public markets. They can be a private market fund that requires $250,000 to buy into it or something like that. And then they can treat Bitcoin as an asset class in that portfolio. And what do? They shed and they sell, or they buy, and it moves the price alongside these other assets. And so I want to present a question to you, Joe. I don't know if you had a chance to answer when we were on the spaces the other day. But what direction do you think will cause the most? What from here in Bitcoin price will be the most pain, cause the most pain?
For sure. So I pulled up my notes because I actually wrote an answer down for this that I was expecting. Okay. So what I wrote was, liquidity is being drawn from the system, right? Liquidity is getting destroyed. And Bitcoin is no exception, right? I mentioned the 24/7, 365 aspect of Bitcoin being a market that you can draw liquidity from at any time. And so as VIX spikes, as uncertainty spikes and liquidity gets destroyed, then that's going to mean there's going to be increased velocity to the upside and the downside, right? For any change. I think in the near term, the most pain can be caused, and this is actually something I didn't talk about, the most pain can be caused by the downside. Bybit right now, the amount of longs on Bybit, all-time high. And so what happens if the Bitcoin price, due to macro conditions, continues to fall, which I'm of the belief that it will, then those longs have to unwind their positions and sell. And so even more velocity to the downside. And so I think because of that, there's a lot of sentiment from people who are solely focused on Bitcoin price action that, this is a floor, I'm going to go long here. But they don't know that we can fall even further because of macro conditions. And so as those longs have to unwind their positions and sell, then I think we have more pain, more velocity felt to the downside because of liquidity, and also those longs having to unwind their positions.
Is there a way where, just like we took out Do Kwon, but Sailor is still holding, I will allow people like the Winklevi to survive, but how do we then sacrifice someone like Novogratz and make him feel pain on his back? P.
I mean, I think he's already feeling the pain. I mean, he did just get a tattoo of a screaming wolf and said he was a lunatic. I mean, that is something you can't take back.
Well, you can take it back, and he'll have to he'll have to feel more pain in getting it removed.
Interesting. Yeah. Okay. Fair.
Maximum pain initiated. Joe, before we wrap things up, is there anything we haven't had a chance to touch on with you before we cut to a quick commercial break?
For sure. For me, not a whole lot. I mean, we didn't go over net realized profit loss, but all you need to know, $3.6 thousand worth of coins were sold at a loss over the last 2 days. And we talk a lot about sellers within the wider market having to capitulate their Bitcoin holdings in order to cover themselves. And so, the idea of Bitcoin as a vehicle for emergency liquidity holds up, right? Bitcoin is ultimately going to be the first to fall because of the fact that it's 24/7, 365. But because of that same characteristic, once credit eases, I feel like it will be the first to rebound. So basically, all this chart is showing is that people are selling their coins at a loss, partially Luna, but ultimately, macros running the show. I believe that as we tighten, this could get worse. People could reaccumulate at these levels. I have no idea. I just put these charts up, so hopefully I could explain it better for people. But yeah, thank you guys for having me on the show. I had a total blast.
Great having you, man.
Thanks for coming on, Joe. Pleasure having you here.
Where can our audience stay up to date with you and how your finals end up going?
Absolutely. So you'll know how my finals end up going tomorrow at 8:45 when I wrap them up. I'm officially no longer a student at that point. And you can find me on Twitter at Joe Consorti. I post stuff about everything markets, on-chain mining, derivatives, macro trends, financial markets. So you can find me there.
I have a question for you before you jump off. I don't think anyone would deny that your facility with the markets, with this information that that we've been talking about today, is remarkable. And I'm curious, what do you ascribe that your proficiency in this arena to? Like, do you have specific habits that have served you really well? Do you feel like your brain is just huge because you got hit on the head like Life of Pi style, and you have like a little piece of your brain coming out of the back? Like, what's if you're being very self-reflective, what type of thing do you think allows you to succeed in the way that you are and absorb all this information and then come to some pretty interesting conclusions?
For sure. So I appreciate it, P. I appreciate that that a whole lot. For one thing, I have a whole lot to learn, but I think one of the things that has allowed me to really just sit down and work to absorb and understand all this stuff, because I still have a very long way to go. And I'm excited to have platforms like this where I can talk publicly and people can find things that aren't correct or help me fill gaps in my understanding. But the characteristic I think has allowed me to succeed is a very low level of risk aversion. It would have been very easy for me these last 9 months while I've been wrapping up my senior year and overloading on credits, taking 21 credits instead of 15, to focus entirely on school and make sure I get fantastic grades in all my classes, because having that piece of paper, having those credentials, it would allow me to succeed further down the line. But I think having a low level of risk aversion, just having no qualms with spending a lot of time diving into these things, and also just posting up my thoughts before before I work for somebody, while I I'm still searching for work. I think waiting for somebody to employ me as an analyst or in whatever position before I start posting my thoughts would be a bad idea. I think that the best way to learn and understand these things is to create, is to go out, post threads, post your thoughts, and really just keep your head held high while doing it. I think I was able to get this sort of ability because I used to be this most scared person you could ever meet. In middle school, wasn't the greatest time for me. I was a bit of an outcast, what have you. In college, I decided to run a small painting company of my own. I wanted to see if I had the ability to take on an outsized amount of risk and succeed. And after 2 years, I was able to. I did $340 some odd thousand in revenue. And because of that, I figured, okay, if I can bet on myself, and do well, then I may as well put the chips back in on the table. And I figured,
wait, sorry, this was in high school?
College. So the last two summers.
Wow.
And so I figured, if I can bet on myself and win, I may as well just keep throwing all the chips back on the table. And I thought this space has a much higher skill ceiling than painting. And so I took those characteristics I learned and developed from doing that and being able to run a business on your own into this. And so day in, day out, if the results are coming in, if the results are not coming in, I just, stay focused, no problem taking on an outsized amount of risk. And I love it. I love it. I love what I'm doing. I love interacting with all the people on Bitcoin Twitter. Love cruising the markets and learning.
I think it's interesting, something you just said, or, focusing on the risk aspect, because one of the things that a lot of people say when they're talking about Bitcoin, I certainly was not like, I didn't learn about Bitcoin until 2016, 2017. And I think that when people look at people who, quote unquote, got in early, and they're like, oh, it's not fair. Like you got lucky, you struck it rich. And I think it's always important to acknowledge, like, no, that was fucking brutal. Like, being in a situation where everybody was like, you fucking idiot, like magic internet money, this is garbage. And like every major news outlet was like, Bitcoin is trash. Like, to take that risk was a significant one, and people reap the rewards from taking those risks. And I think it's interesting because you are effectively doing a similar thing now. You're taking a risk with the only thing in my mind that is more precious than Bitcoin, which is your time. And you're successfully managing that risk of your own time, and you are reaping those rewards in the same way that people who got into Bitcoin very early did as well. And I highlight that because I think that there are always opportunities for people, as of like right now, to invest in themselves and in things related to Bitcoin that have the same effect. Like, don't accept that like, oh, you are just where you are because that's your lot in life. Like, take risks, figure out how to manage those risks effectively, as you have, Joe, and excel. I fully think that within a year, we're not even going to be able to get you on this podcast, because you'll be managing just an astronomical amount of money, and it'll be disgusting. I'll be like, I can't. It's just the ROI is too poor to talk to you guys for 90 minutes because my time is worth $1,000 a minute. It'll be some shit like that. Anyway, I appreciate it.
If you big time me, I'm gonna smack you.
I will not. I won't forget. I won't forget. But I that's extraordinarily humbling. I appreciate you saying that, P. There were, I could have, running a business, like it entirely being on your shoulders. I had the ability to lose money as a college student that needed to pay a certain amount of student loans every month. But there's some level of just ignoring that and continuing forward. And I promise anybody who's listening, you'll reap the benefits. If you don't see them in front of you immediately, they will come. There were days where I would wake up at 4 a.m. I'd go help power wash a house on one side of the state, and then I'd need to go interact with the customer on the other side of the state. And then, I was losing money on one job, and then, all of these different things going on at once. You wouldn't get home until, midnight or 1 or 2 a.m. and then you'd have to do it again. But there's a lot to be said in this community about proof of work and just putting your head down and doing stuff, as opposed to just staying the course and getting traditional credentials. So I really do appreciate you saying that. I still go to parties and functions and hang out with all of my painters still down in Boston. So we'll absolutely not forget anybody.
Love that. And just as a reminder to everyone, tickets for Bitcoin 2023 are on sale now. Be sure to get your tickets before prices go up. Joe, I know you were able to make your way down in Miami. Any message for everyone to convince them to come join us next year for Bitcoin 23?
Yes, it is an extraordinary opportunity. If you're looking to break into the Bitcoin space and get a job in Bitcoin, or meet the people who make it all happen, on Bitcoin Twitter, meet some of the most intelligent people in the space. This is the place to be. Not sure where the location will be, but I'm sure it'll be fantastic. On Miami Beach, it was sensational. It's a very fun time, not only from a networking standpoint, but also getting to see some of these people speak live, shake some of these people's hands. Really, it is the place to be. It is the apex conference in terms of Bitcoin. So absolutely get your tickets now while they're on sale. You're in Bitcoin because you have load time preference. So have some load time preference here too. Purchase your tickets early before they go up in value.
Awesome, guys. We're going to take a quick commercial break, and then we're going to dive into news and notes. So stick around. You're not going to want to miss it.
What is up, guys? We are back. It is IQP. What is up, P?
Doing great. Doing great.
What's
hanging
up,
out.
Chris?
Nothing much. Hanging out with you guys. That was a good talk. I mean, Joe's brilliant. I mean, I think these young guns are going to put us obsolete. You know, the boomers say we're coming after them in the Gen X, but these young Zoomers are brilliant. And yeah, dude's 21 years old. Not to dox his age. I guess I just did, but it's crazy.
I mean, look,
I
he's
have
a college kid. All these college kids, all these youngins, as Greg Foss likes to say, they need their sphincters to get tested. And I think we're going to witness over the course of the next year, especially how much they're willing to get tested.
Yeah, I'm just over here that entire conversation, just sharpening my wrench, just getting ready. You know, he's going to make all the money and I'm going to $5 wrench his ass.
That's going to be a $500 wrench with inflation by the time you can use it.
100%. But I'm ready is my point. You got to know your place. And my place is dealing with this wrench. No, he's fucking amazing. I think it's super interesting. I don't know. I will say that the sort of like narrative of, you know, young guns taking their jobs and all that shit. I can't relate to it at all. Like, I'm definitely the oldest person on this call, the tender age of 87. And I just feel excitement whenever I meet new people who, whatever age they are, who are doing incredible stuff. I think, yeah, it's all good for Bitcoin and thus good for me.
That's awesome. I agree. Q, take us off the first story or lead us in the direction you want to go for this.
So I want to start with Coinbase. They released their earnings, I believe, yesterday. And I mean, the stock has essentially cratered since opening their mouth, since before they opened their mouth, since Brian Armstrong decided to go full into shitcoinery. Whatever you want to say, give rationale for. Coinbase has just been a mess from the moment it IPO'd to this very sketchy phrasing. And I'm pulling it up right now, but they essentially, sorry.
No, I just said hit us with it. Roll the clip. There is no clip. It's you talking, but.
Moreover, because custodially held crypto assets may be considered to be the property of a bankruptcy estate in the event of a bankruptcy, the crypto assets we hold in custody on behalf of our customers could be subject to bankruptcy proceedings.
What the fuck?
So in short, if you're holding Bitcoin on Coinbase and they go under,
your ass is grass.
Yeah, you don't own those assets. It has to go to pay off your debt obligations, kind of, as I kind of brought up earlier with the Microstrategy. I mean, not that I'm worried about Microstrategy, but, you know, debt offerings, it goes to the debt holders first. And if it doesn't cover all the debt offerings, the equity gets zero, as Greg Foss always says.
Fuck? How is that even, like, is that how it works with equities? That's insane.
Yeah. They get first right to the claim on, they get paid back first because they loan them the money. And then if you're holding an equity that goes to zero, equities can get split. So let's just say they pay off 100% of the debt, but they're only $1 million. If there's however many outstanding shares, let's just say 10 million outstanding shares, that means every share that you own, you only get 10 cents back on it.
But that's not, like, you're 100% right in all of that. But that's not really what's happening here. What's happening here is as though you're on Robinhood and your 401k on Robinhood is essentially sold off for pennies on the dollar because Robinhood mismanaged their money. The other thing that kind of this reminds me of is American Airlines just offering up insane dividends for the last decade, mismanaging their money over time. And then when they needed money, they go to Uncle Sam and ask for a bailout. Like,
yeah, Q, I'll interrupt you there though. It's the way that I'll talk about Bitcoin because I don't know the way crypto is defined, but technically Bitcoin's seen as a property. If a business goes out under, they have to liquidate properties or anything that they hold personally themselves to cover their debt offerings. So Bitcoin it's a zero risk asset, or it's a, you know, bearer instrument when you hold it, but they're selling off. It's the same way that if, let's just say, Coinbase were to go out, when they sell their headquarters, it's not like all of a sudden it's like, oh, this is still Coinbase's headquarters. No, they have to sell that property to whoever. So they're treating, I know at least the Bitcoin as property. I don't know what crypto is. I guess they're technically illegal securities if we want to be honest. I know they're going to go after us for that. But technically, if you want to lump them in with Bitcoin as property, then they're selling their property in order to cover their losses. If your 401k with Robinhood or Fidelity or whatever, and this is just an example, if they were to go under, those got transferred in your name to a different brokerage. So like, yeah, you have a claim on, you would have a claim on your 401k, or at least the assets in that. And if Fidelity, if BlackRock, if Goldman or whatever would go under, it would transfer to whoever acquires that brokerage. It would have to be someone that holds a securities license. So like, for example, if Robinhood were to go under and JP Morgan were to get it, you become a JP Morgan client and it would transfer over. Obviously, if that's occurring, there's probably other issues in the stock market, in the financial sector, I would assume, or just markets abroad. So that, yeah, the value of your 401k is going down, but you would still have, they would hold the equity, or at least the stock in your name for you. But yeah, it's not a bearer instrument, but yeah, that's just, I'm just throwing it out there. I don't know if you guys want to riff on that.
No, I mean, look, I used to have a portfolio, like my very first Roth IRA was, I think it was a website called Open House, because the commissions were like the cheapest. It offered like very minimal stuff, but the commissions were so low. But they eventually were bought by E-Trade. And so my entire portfolio got transferred over to E-Trade. But the clarification on it being considered a property, I get. Where I'm getting a little stuck though is this idea that like you're just custodying this property on behalf of someone else who actually has ownership to it though. So this is where the water gets muddy.
You don't, I mean, with Bitcoin, you're talking about Bitcoin, or you're talking about,
I'm talking about Bitcoin.
Oh, okay. Yeah.
Like in theory, you should, hey, I just bought some Bitcoin on Strike. That is my Bitcoin. However, because it's still on my app on Strike, like it's still held by Strike on my behalf. However, it is mine to do with as I see fit.
I'll clarify one thing. It's not held by Strike, it's held by Prime Trust. Sorry to cut you off there, P.
Fair. Yes. Prime Trust is what comes up on my bank statements every time I deposit. Yes.
Go ahead, P. Sorry to cut you off there.
No, I was just going to say, like, I think that it's not the same thing, but I think the way that equities work is an interesting proxy. I think that, you know, like if you watch any old Westerns, the whole plot of like, oh, we got to break into this safe and steal these bonds. And it's like this physical piece of paper that has like nice little Skrillex, or not Skrillex, obviously, but like writing on it. That's like, this is the document. You have this thing. It is a bearer instrument. You own the bond, or you own the deed. And that is honestly, like, even to me, that is an alien concept. Like the idea that there is a piece of paper that gives you the right to a thing. Now, I obviously understand that very deeply with Bitcoin, but it's crazy to me that like when you sign up with a broker, you're giving away all that shit. Like they're very clear in their like terms of use that it's like, yeah, you don't actually own shit. You own a record in our database that says that, you know, you maybe own this thing, but like if we go under, like you're fucked. And it's interesting that it makes sense, but it's interesting that also applies to Bitcoin. But like, I mean, Chris, in your mind, like if you own stocks and with E-Trade, and E-Trade declares bankruptcy, is the idea that you would lose your stocks because it would be part of bankruptcy proceedings like that?
No. So they don't. So maybe I said it wrong, but like basically whoever, when they go for bankruptcy, those things that broker dealer owns it in your name. So
and they get transferred somewhere else. Yeah. Totally.
Yes, exactly.
So Coinbase is saying that like, not only we don't actually own it in your name, we fucking own it.
Yeah. That's pretty much what they're saying. Like it's on our balance sheet as an asset. So meaning if we go in for bankruptcy, it's not yours, it's ours, is basically what Q is getting at.
Yeah. So is that as crazy as it feels like? Like, is that totally insane? Like,
yeah.
Or am I just reacting?
No, that feels
Bitcoiner?
Insane because like, okay, so perfect example, let's just say we're of retirement age and we're counting on it and E-Trade were to go out of business. Even though like the stocks are in my name, it would have to go through bankruptcy proceedings. And you hope that Social Security or a pension, which we don't have, or like something like that could cover you. Like that could cover you in that time being when it's getting done through bankruptcy proceedings. Like you'll eventually get it, but it's kind of like the Mount Gox thing. It's like, oh, like, you know,
I'm going to be dead before I get my Mount Gox money.
Yeah. Did you have some in that?
No, I'm saying like in theory, if I did, like I fully expect people who had Mt. Gox money, they're never gonna get that fucking money.
And then the worst part is with the Mt. Gox thing, it's not market to market on the Bitcoin. It's market to market on the price of the Bitcoin, on the dollar amount.
Yeah. You're getting like triply fucked, quadruply fucked.
So you're not holding Bitcoin that's appreciating in value. It's like, oh, it crashed at, I don't know the price. Let's just say it was $1,000 per Bitcoin. And let's just say you had 10 Bitcoin. They'll give you $10,000 cash, but you're not going to get, if 10 Bitcoin are now worth, 300,000 like it is, or 29 or 290,000 or whatever the price is, you get that and you're like, well, this sucks. Like that's the crazy
100%. Thing. But I think Mt. Gox is a fantastic learning experience, right? Like pain is an excellent teacher. And Mt. Gox is a perfect example. That taught everyone like, oh, if you hold your Bitcoin on exchanges, you're fucking playing with fire. But let's bring it all the way back. Like Q, you brought up this specific line in the was it in the earnings call or in the prospectus?
It was in their earnings statement. It was in the earnings statement they released.
Yeah, that's crazy. I didn't realize that was where we were right now. Do you think that other like when is Prime Trust going to follow suit? What is the status of Prime Trust custodied Bitcoin?
Yeah, I don't know. They're basically making a fee on well, they're like Coinbase. They're making a fee on the trades, the market to market, whether you're selling to them or whether you're buying from them. I'm sure they're getting squeezed, but I'm not sure if Prime Trust is a normal bank that obviously they partner with Swan and Strike. So if they're just a normal like retail private bank, I'm assuming that they're under the same what banks are. They're like 94% lending, 6% like that they have in-house to like cover their market turns basically. But I'll kick that over to Q maybe.
Sorry, repeat what you're asking.
So Q, oh my gosh, I'm mixing up the letters. The first time
can't do it on air.
No,
don't you fucking dare.
What P was saying was that like what's Prime Trust in relative to Coinbase? Coinbase is obviously saying like we can go under. I think Prime Trust might be in a better spot, even though I don't recommend like banking stocks or whatever. I think they're not just digital assets. I think they hold more of a banking license and do banking. They're kind of like the bridge of JP Morgan and Coinbase. So it's like they're doing normal lending and borrowing in the fiat markets, but they do get a small fee for holding the banking license to both Strike and Swan.
By that, I think overall, the big thing here is the current regulations in place allow for Coinbase to kind of take advantage of this type of a loophole. It just does. It allows them to afford much greater risks, with the backstop now being like, hey, literally, not only are we collecting money and is our revenue based on the fees that we do in the different product offerings, but we now get to move our backstop. We have our money on reserves, we have other assets on reserve, but even our clients' assets are now part of our calculations. And I don't like, market doesn't give a shit if I like it or I don't like it, but like, it doesn't sit well with me. This was supposed to be a way to decentralize the control of money. That was the whole purpose behind what the cryptographers wanted to do and the cypherpunks were after. And ultimately, what we've accepted is these exchanges give better and easier access to people like me who want to be buying Bitcoin, but maybe don't have a connect or a direct connection to someone who maybe is mining their own Bitcoin, or a mining pool that is selling on their own platform. And Coinbase is one of the largest, if not the largest, and most well-known exchange out of any of them, especially domestically here in America. So you have a lot of these naive investors who are using Coinbase thinking they're fine. And then you turn around and you have those of us who understand sort of the nuances of what the byproduct and fallouts can be. It's a very risky situation that we find ourselves in. And like, I see the person in the comments talking about how like, dude, everything can change on a whim of these government officials. And that's absolutely true. And I think I know it's really hard for a lot of Bitcoiners to swallow this pill, but I think this is a moment where we kind of do need to look to regulators and be like, yo, time out. Like that is not in the best interest of people. That is not in the best interest of citizens. This is only really in the best interest of the few, the businesses, the people who, like, you're recreating a cycle that doesn't need to be recreated, that this entire ecosystem was meant to destroy. And unfortunately, we kind of have to go hat in hand to these regulators, in my opinion. Like Bitcoin Advocacy Project, this is your next big project. But I don't know what your guys' thoughts are on the regulator side of this.
Honestly, like, I mean, look, I'm an anarchist. I'm a, well, not really, but I'm a privacy maximalist, self-sovereignty maximalist. To me, the solution is not like regulate this to make the situation better. I think that these types of situations are actually ideal. And I think that they are fantastic because they make clear the fallacies that exist within our systems, and they bring it to the forefront. So the solution that I see here is not like, oh, we need to like get this regulated. This is a terribly worded sentence, but the solution is not, we need to get this regulated better. It's, we need to, this should be a catalyst that drives people to embrace like radical self-sovereignty and taking full personal accountability for your life and your financial success. And I don't think of Bitcoin as a financial asset. I think of Bitcoin as a way to store value. And, all the way back to the, plains of Africa, like that is the truest thing that we are trying to do. It's how do you basically produce value and then store it in such a way that it can be utilized later effectively. And I think of time as the most precious asset that all of us have. Like you can never reclaim the time that you've already spent, right? We are all going to die one day. And then very, very, very close to that is Bitcoin, which is a proxy for energy and time and effort. And I see this as a great moment in Bitcoin's history. That's maybe an extreme characterization, but if the outcome of this event is more people understand that self-custodying your Bitcoin is incredibly important, then I think this is fantastic and it's only positive.
Yeah, I would agree with what P said. I mean, if you get on like a Bitcoin standard, which I think many of, like all of us on this call or a lot of people at this company, if I were to send P right now 1,000 sats, 2,000 sats, whatever denomination in sats, like if that's still 2,000 sats tomorrow, the next day, it was, if I sent it to him 2 years ago, whatever it is, 2,000 sats and 2,000 sats, but everyone automatically defaults to what's this worth in US dollar terms? And like, that's not the way you should be thinking about it. It's like, okay, yeah, like obviously the world right now, like 99% of it's priced in dollars. So that's like just like what you naturally do. But in the future, you don't have to worry as much about like that pricing back in dollars. You never have to go back to it. You never have to go back to, they can confiscate your money. They can bankrupt it. They can inflate it. They can like all those different things. That's what makes Bitcoin different. And I know it's a hard concept to be like, when we just watched, we were at 69K and now we're hovering at 29K. It's like, oh, well, this is less valuable. It's like, yes, that's true in a nominal sense at this current moment, but the Bitcoin's value or the way to transfer value across time and space didn't change. 2,000 sats is still 2,000 sats is still 2,000 sats. They will have different denominations over the course of time, over any time frame. Like 2,000 sats in 2011 is a very different nominal value than in 2022. So I just think that's a good framing for all of it. Q, you got anything?
I won't lie. I was going through, I posted like my thoughts on the Coinbase stuff on my Instagram for like my non-Bitcoiner friends. And I've had a lot of people be like, wait, what? Because again, like this is, to us who are in Bitcoin, no one uses Coinbase. I think this is going to have greater implications, how this gets handled. Obviously, like none of this happens if Coinbase doesn't go bankrupt. And so there is that component to this as well.
Who knows though? Wait, do you really think that though?
That Coinbase can go bankrupt?
No, do you think that this isn't that is the only way that this plays out? I feel like and I'm not pretending to understand it myself, but I feel like this is I feel like I'm playing like 4D chess with, fucking Coinbase, and I don't pretend to know exactly how this plays out.
What P is
that
saying,
is a crazy. Go ahead.
No, I was like, what P is saying, he's like wants to time this and take out a short on Coinbase to acquire their Bitcoin by shorting them into oblivion.
Yeah, 100%. That's exactly what I'm saying. I need to quadruple my Bitcoin stack, and this is the only way I can see to do it. No, I just feel like this is a crazy thing to put in your earnings statement. Like, what the fuck? Like, what does that actually mean? Do they think that they're going to go? I feel like the obvious conclusion has to be the cat's paw.
Yeah, and I'll just I'll add on this real quick before Q goes next. Like, this is, I mean, like I said, I kind of, not that I came from equities markets, I was like an engineer and I liked looking at stocks and stuff, but like I never really understood how hedge funds operated. So like a perfect example, if like reading that is correct, the prospectus from Coinbase, that like the assets of their clients, if they were to go bankrupt, like Greg Foss would talk about this strategy. So his hedge fund would buy a bunch of bonds or Coinbase bonds or debt, corporate debt, and put that on his balance sheet. He then takes out a synthetic short on or shorts Coinbase's stock. So what they're really trying to do is like the whole point of a hedge fund doing that is to get money, but the way that they can do that is in other terms, in the way of getting assets. So let's just say you're a hedge fund and you're like, well, I don't have enough money to buy GBTC, buy that fund. I could buy as much bonds or debt from Coinbase. Not that I'm trying to get the yield on the corporate bonds, whatever they are. You're trying to short the equity. And if they go bankrupt, you have first right of claim if you're the largest debt holder to the Bitcoin or the assets that you want to get paid in as a holder. So that could be a way that hedge funds, if they have enough money and enough weight, they could short Coinbase's stock to the point of them bankrupting. And obviously they have mechanisms to prevent that, firing people, selling the other properties they have, getting rid of like doing other things to try and prevent that. But hedge funds are in this game of trying to buy and acquire assets, whether it's equity, whether it's property, whether it is, underlying assets of Bitcoin. Like that's kind of what we saw with the Tether Luna thing. I could see that being a strategy for Coinbase. It's like game on, like a hedge fund, like if Bridgewater Associates, not saying that Ray Dalio or his hedge fund could do that, but they have enough weight that they could do that. So it's interesting.
Ray Dalio just texted me saying that he said, "Go fuck yourself. I'm going to take all your Bitcoin."
I want to go back to the question you presented.
I tried to get him at Bitcoin 2022, but not into it.
Dalio, come on BM Live with us. Come hang out. P, if I'm understanding your question correctly, it's whether or not I believe that Coinbase declaring bankruptcy is the only event that would cause them to potentially sell assets that they're holding on behalf of their customers, correct?
I missed the first part of that. You cut out.
Essentially, is what you are asking, is Coinbase declaring bankruptcy the only event in which they would sell other people's Bitcoin and other cryptocurrencies?
Not quite. I guess I am saying I don't know what it means that they put that in their earnings statement, but I am not assuming that it is the obvious conclusion that that's the only way that could play out. But maybe that is. I mean, you could be saying, P, that is literally the only way this plays out. Like that is what this earnings statement said. I have not personally read the earnings statements. I'm just reacting to that. So maybe not. Oh, Q is making a huge gaping jaw drop face. What does that mean?
Dude, I didn't really look at Coinbase's chart today fully. It's down 40%.
Like right now?
Well, now it says 28. I don't know why I said 40% before. But oh man. It is getting.
I guess I'll answer P's question as Q's mouse just keeps dropping lower and lower to the floor. I don't think that this is the only way it plays out. Not that I'm saying Coinbase, I like them or what they do. But I think that maybe it cleans up, that they get rid of all the other scam coins. Maybe it'd be interesting if they're like,
Never
we're
gonna
now
happen.
going, we're only going Bitcoin only. Alex McShane, aka Brian Armstrong, comes out and like, this is the day, plant the flag, we're Bitcoin only again. I don't think that happens. But to P's point, I mean, on a long, like, what's the time horizon? Is it this year? Is it 10 years? Is it 20 years? Like, what do we want to call it that this happens? I mean, Walmart could go out of business tomorrow, and I don't think that would occur. But you know what I mean? Like, we've seen companies go out of business in history. So I guess what's your caveat or time frame for it?
We've seen companies go out of business in history.
This is true. That's a statement.
Yep.
I think there are two things that I'm really paying close attention to as I'm like looking up just technicals of Coinbase right now. And first, their debt percentage. So the amount of debt they have compared to just their total value, it's over 50% at 53%. So that's signaling like roughly something to the tune of like 6 billion in outstanding debt. They turned in a negative earnings report after a quarter where they were expected to actually have positive earnings. So you're seeing money slow down. The majority of their money comes not from fees incorporated from Bitcoin buys, but rather from buys of everything else. So they're not even in the business of Bitcoin. They're in the business of cryptocurrencies at large. But that money slowed down. Coupled that with the increased amount of debt and leverage they're taking on, it's not necessarily like as clean of a scenario, in my opinion, as MicroStrategy taking on debt to go buy Bitcoin. They're taking on this debt to try new product offerings out that Coinbase isn't necessarily sure it's going to work. In a weird way, it's almost like a safer, more responsible form of taking on debt and having that capital deployed on Bitcoin than it would be to spin up Coinbase NFTs, which they just announced, I think launched last week. So do I think bankruptcy is the only way this plays out? No. Dude, there's genuinely nothing stopping them from actually selling out Bitcoin that they hold on behalf of themselves or others. Like, there is a very interesting, I think, cat and mouse game of trust that has been tested, especially over the course of the last 6 months. Coinbase failed that test most recently with the whole Russia sanctions rulings. We bore witness to it in Canada at the beginning of this year. It's this strain in this test will not go away. And I think each of these moments where we see these tests happen, it's very important to see how it gets handled, both from a regulatory standpoint, as well as by the business that is under the spotlight, because that precedent is how future businesses that fall under the spotlight will look to behave. Because, hey, if Coinbase acts maliciously and then the market says, fuck you, we're done with you, and all of a sudden Coinbase's user base drops because the market dictated, hey, Coinbase did something sketchy, shitty, and terrible to its users, so all of their users went elsewhere. Well, now the next company that's put up against the wall and has to make a similar decision will look to Coinbase's decision and say, wait, we can't do that. It did not work out well for Coinbase. So I think it's worthy for us to be paying attention to without giving too much weight beyond just the simple and very, very valid reminder that get your goddamn Bitcoin off of exchanges and stop buying Bitcoin on Coinbase.
Yeah, that should be the takeaway here. Not your keys, not your fucking coin.
Where was the first place you ever bought Bitcoin, P?
It's a good question.
In a back alley back in 2011.
Yeah. You know, I said earlier it was 2016, 2017. You know, I was short of money. I decided to sell my body to the night. And, you know, somebody was like, hey, bro, you want some Bitcoin? And I was like, what is that? And then I learned about freedom money and, you know, it was great. End of story.
You're muted.
Chris, I used Gemini for my first few buys, and then I switched over to Cash App. But Chris, where were you buying?
Oh, I had to
Well,
run the gambit of mistakes. I went Robinhood, then Coinbase, then I used Swan and Strike. So that was kind of my process of going through it, basically.
now the real answer for me is I was building, I'm a software engineer by trade, and I was building equities trading bots, options trading bots for a couple of years and did well there. And then basically was like, oh, this crypto thing is interesting. People want it. It's super volatile. Like, let's fucking go. So I had bots running, and I did well, but it wasn't until I didn't really understand the significance of Bitcoin and why it was so important until much later. In 2018, 2019. And at that point, I was like, holy shit, this is the thing that I never knew I always wanted and needed. I have a pretty cynical view of markets and economies based on the fact that, as I said yesterday, I kind of cut my teeth going into high school, again, dating myself, like literally as the 2000 crash was happening. Graduated college as the 2008 crash was literally happening. And then that's kind of the forge in which I was, or the fires in which I was forged, my psychology, my personality, from a professional perspective. And so I have a very, very dim view of, governments, central banks, all those associated systems. So to me, Bitcoin was a bit of a godsend. Funny story. My father was a precious metals trader for a very long time. That was his profession. And he actually was part of the group, McCatter, that broke the Hunt brothers, Bunker Hunt scandal, where they tried to corner the silver market. And he has some fucking wild stories about how that actually happened. The way that it was represented in, most places is not, it's in the right vein, but it's not 100% accurate, and it's fucking wild. But I say that only like that was my father was always like, the government is trying to fuck you. Precious metals is the only true store of value. And then when I, went to him eventually and was like, yo, you got to try this Bitcoin thing. It's fucking great. And I was ready for this huge conversation, this like debate, this fight, and me being like, you got to protect your future. Like, it's important. Gold is a shit coin, blah, 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 blah. I spent a week, getting all my facts together. And I opened the conversation with like, all right, so there will only ever be 21 million. And he was like, I'm all in. And I had to be like, no, wait, dad, that would be irresponsible. Like, cool your jets. Like, let's figure this out. And he's like, fuck you. Let's go. It was like,
this is a true story.
Yeah.
That is awesome. And that's 2016 when he got in 2017.
No. I got him in much later, but
okay.
But yeah, I was so ready for this massive fight, and he like immediately was like, wait, restricted supply, it can't be changed. And he trusts me as a software engineer. I was like, it's just never gonna happen. And he was like, all right, let's fucking go. And I had to be like,
I told you guys the story yesterday. My buddy who was setting up miners and the electrician that showed up. And for the people that didn't hear it yesterday, he's like, you mean this fucks the government? My wife doesn't have to know about it? It's like, yeah. He's like, fucking, I'm in, man. Sign me up for one of these things. It's just funny.
Dude, I think though, Pete, your story is very accurate to like what a lot of people's journey to Bitcoin is. It's not like everyone dives in understanding what freedom money is and the importance of separating the state from money. Like I myself looked at it. Honestly, it was 21 million of it, and everything else. They issue more stocks every year. They print more money every year. Wait a minute, that was it for me. But it took me 2 more years, even more than that, before I really understood beyond just what the value proposition of what Bitcoin was, to like really explore what money is. And I think that is this moment right now for a lot of people, where they were buying on the price going up the last couple of years, and then here it is, the price is really cratering. We're in a full-blown bear market right now, and you either stay convicted by learning more and understanding all of the various use cases and how endless they really can be and are, versus, like it's worth less in US dollar today than tomorrow, but my US dollars are worth less than they are today than they were yesterday. So like, does it all really matter? One Bitcoin is one Bitcoin. I do want to bring up or touch on two very important things from Bitcoin land, and that is hash rate and difficulty adjustment. Chris, can I have you tee us up for this or share with us sort of
Yeah. Well, what do you want? Just go with it.
what's going on?
Yeah, so yesterday we saw a difficulty adjustment of upwards of 5%. So the hash rate is getting, it's going up, which means that it is getting more difficult right now to mine Bitcoin than it was 2 weeks ago. For those that don't know, the difficulty adjustment occurs about every 2 weeks or every, I'm going to mess this up. It's 2016 blocks. Is that right? Yeah, 2016 blocks, it readjusts, which is about every 2 weeks, like I said. And when that occurs, it can either go up or down or remain the same. It went up, meaning that it is more difficult for miners to win Bitcoin or find the block in order to get and ultimately get rewarded in Bitcoin. It's interesting, as the price of Bitcoin, the nominal price of Bitcoin comes down, but the difficulty adjustment is going up. It's kind of like two lines like meeting each other. So if it's here's the price and here's what the cost is to mine it, as those numbers get closer, if they cross, or if your power of electricity is more expensive in one area than the other. We had Econo Alchemist on Monday, and he basically said that his residential power of 13 cents per kilowatt hour was more expensive than it was to mine, meaning that he was mining at a loss. And he was saying that he lives on Bitcoin. He can't really afford to do that right now. So he would be selling Bitcoin to mine Bitcoin at a loss, meaning that he would be getting less and less Bitcoin by doing so. So he unplugged his miners. Ultimately, Bitcoin miners will all face that decision if the price goes low enough. So yeah, they can kind of borrow against it or take out loans again, or like we said, sell debt or borrow against the company if they are a publicly traded miner. But ultimately, that game comes to an end, or that comes to a head eventually. You know, the debts come due one way or the other. Obviously, if Bitcoin's price moons or goes up, they can offset that and not have to pay back their debts or sell a little bit of Bitcoin in order to cover those costs. But that's just kind of my 2 cents on it.
I think it's also worth noting, and correct me if I'm wrong, Chris, the hash rate has also now hit a new all-time high.
Yep. So it went up. It was at an all-time high 2 weeks ago. We're at a new all-time high this week. Like I said, it could start to go down. If the price continues to go down, but the hash rate goes up, it will reverse because people will have to unplug their miners. Or if they have enough capital or fiat cash, because they've been stacking cash instead of sats. I don't know why you would do that, but for a case like this, as an emergency fund, you can delay turning off your miners while mining at a loss. And then ultimately, as the hash rate comes back down, then they become profitable again. And then, the cycle begins again.
I mean, I'm a big believer that hash rate will predicate price. However, we're not really seeing that. P, what are your just general thoughts on these numbers not coinciding with the price?
I think Chris summed it up super well. For me, I tend to, my frame tends to be based on the opening and closing of lighting channels. So increases in difficulty and, I don't know, that's how I tend to think about it. I cut my teeth in the Lightning Network during a period where, fees were extremely low, which was super conducive to experimentation. So I have a super biased view, but I don't have a strong sense of why, of the disconnect between the price and the difficulty. Other than what Chris said.
I mean, it's interesting to me because you could point to hash rate as like, hey, the network itself is growing. There are more computers, there are more miners contributing overall. It's making the network more secure from attacks. And yet we're not seeing that reflected in the price. I think there's just this disconnect. And personally, this is all speculative, but I think we're reaching that point where you're starting to see a lot more of the money tied up into Bitcoin is tied up from a speculative lens of this is an asset. So that monetary maximalist, I believe, from famed Pete Rizzo, who refuses to come on Bitcoin Magazine Live, versus being a platform maximalist, which in a weird way, actually better drives the price as far as like the real value of Bitcoin. And so while we have this overwhelming majority now viewing it as this asset, all of a sudden the price is more dictated by them because, hey, this is the majority of the money. The majority of the money doing something is going to move the price in that direction. That's just price action 101. And so as a result, we can continue to build out hash rate, but the effect on price won't really happen until this overall number of platform maximalists starts to creep up and be more of a 50-50 or even have a majority over asset maximalists. But that's just pure speculation. I've left them both speechless with my speculation. That's how good it was.
It's true.
Yes.
I was thinking about, you talk about platform maximalism, just the on-chain transactions, the more on-chain transactions, the greater the demand, it changes the demand structure, versus like lightning channels, right? Where you pay up front, you only pay on-chain fees to open, and then eventually, if you choose to close those channels. And then from that point forward, you basically are connected into this giant spider web of the Lightning Network. And that, in theory, does not have an effect on the on-chain transaction fees. So I was thinking about that and what that could mean.
I love it. Any last words or thoughts on Coinbase or hash rate and difficulty reaching new highs?
Coinbase reaches a new low, I think, but the hash rate's reaching an all-time high, or at least in terms of their equity. Yeah, I think we've been saying it, or I guess Pete Rizzo was right, or Shinobi was right, saying that we're in a bear market, and I think we are seeing that in the nominal price of Bitcoin. I think I'm going to say other people got greedy, but Bitcoin has a way of moving markets in general, and Bitcoin's the freest and most open market, has a way of moving, causing the most pain. And when we're saying that, we're relating that to the nominal value. And when people take out these leveraged loans, whether you took out a loan against your house, or if you took out a loan against your business, or if you took on more debt, it's trying to shake out those things. And in doing so, you owe the fiat denominated debt back. But I think even Pete brought this up a few weeks ago when we had him and Aaron on. I'd say we collectively, the company of Bitcoin Magazine, or just people at large, are trying to arbitrage between the fiat world and the Bitcoin world. And when you're doing that, you can run into hiccups of one gets, like anything we were talked about on FedWatch, that currencies are getting stronger, or the US dollar is getting stronger relative to all other fiat currencies. Even though it's getting stronger on a global scale, it's losing purchasing power on, here in terms of inflation. And then ultimately that echoes out into the broader economy as we're seeing hyperinflation in other, I'd say, emerging markets. And, it's just kind of like, who says it? Kaiser, you can't taper a Ponzi. So we're kind of seeing this money printing game come out, and, it's hurting markets abroad and all that. So that's my 2 cents on that.
I think it was Foss, but honestly, sure, we can give both Kaiser and Foss credit for saying you can't taper a Ponzi. P, last words.
I'm just curious if either of you have thoughts on the Grayscale SEC meeting. I think the headline from CNBC is Grayscale tells SEC that turning biggest Bitcoin fund to ETF will unlock $8 billion for investors. I'm curious if you guys have any thoughts there.
Yeah, I could talk first. I mean, I don't know how they come up with those numbers. I don't know if they're just like they called up their clients, as in JP Morgan and all these other, big banks, and just said, how much would you buy? And they just give them kind of a number, and that's how they come up with it. I don't know. It'd be interesting with the price going down so much. Is that when people say buy the dip, or is this mass fear, don't buy anything, go into cash? So I think it's interesting. And it's also, maybe P, you can elaborate on this, but wasn't Grayscale also saying that if they don't get their ETF approved for their next, either in June or July, that they're going to sue the SEC, which is interesting. Normally the companies don't sue government bodies, but it has happened in the past.
I'm not sure, actually. That would be super interesting. I mean, I'm asking out of selfish interest. Just for the audience, for a long time, certainly during the 2017 run-up, Grayscale was one of the only ways that a lot of investors could get access to Bitcoin directly. And so it was trading at like, I think 137% premium, probably even higher at certain times. And so it was crazy right now. And for sort of modern history, or the most recent, I should say, it's been trading at a discount. So, my retirement accounts are currently in GBTC, and it sucks balls to be in that because it's trading at, I think, like a 25% discount, something like that. And so there's been, a speculation that if they are able to get the SEC to approve their, them transforming it into an ETF, that will then close that premium to NAV gap. But I think that remains to be seen. I feel like people have been wrong about Grayscale kind of on a consistent basis, in GBTC, that is.
Yeah. And I mean, some people talked about the contango trade, which is, you buy the underlying asset and then the futures contract came out. And so I'm going to explain this, put my Greg Foss hedge fund hat on, even though that I was never a hedge fund guy. But basically kind of what P is alluding to, you're buying Grayscale at, or how does it work? Yeah, you buy Grayscale at a premium when it was at a premium, and then you short the futures contract came out to short it. So basically you're capturing the spread between the net asset value of the GBTC is above Bitcoin's price, or that's what you do. You buy Bitcoin and then spot, and then you short the futures contract, and you're like trying to arbitrage the value of GBTC down to the net asset value. And for the longest time, the trade was giving like 20%, 24% when it was positive. And then ultimately, once the shorting catches up with it, it pushed it all the way down and it went negative, meaning that it was trading at a negative value compared to how much Bitcoin they have. So the GBTC stock ticker is less valuable than the total sum of Bitcoin that they hold on their balance sheet. And I think Q and I brought up earlier last week or a couple of weeks ago that we were seeing that with MicroStrategy as well. Technically, the company's only valued at 3.8 billion Bitcoin, or $3.8 billion. But the total number of Bitcoin at the time that we did that was 4.7 billion. So meaning that their Bitcoin on their balance sheet was worth more than the whole company was as a total. Obviously, the price has come down, and that's probably negative or very close to where it is. But it was very interesting. For the longest time, you could buy MicroStrategy at a discount relative to what they have in Bitcoin. And just one little more caveat is GAAP accounting rules. We don't need to go on a rant in that. But basically, GAAP accounting rules are when you have Bitcoin on your balance sheet as a company, if Bitcoin price appreciates, you can't account for the rise in your company's profits or stock or anything without selling it. But if it goes down, you have to write them out as a loss, which really sucks. And Michael Saylor, I'll leave that to him, but he's been trying for the longest time to try and change those GAAP accounting rules. So basically, if Bitcoin were to go to zero, MicroStrategy would have to write off all of Bitcoin as a loss and could bankrupt the company in theory. Obviously, they have ways to get money and finance it and do all these different things. But if Bitcoin were to go to $0, it would bankrupt all of MicroStrategy based on how much they bought, which is very interesting. And it sucks because if it went to zero for a brief moment or a penny and then it rebounded back up, they can't say, oh, no, we're in good standing shape now. Like we rebounded. No, you have to keep evaluating. I think it's by quarter or month, or I don't know the GAAP accounting that well, but basically they have to keep writing it down off their profits for each quarter, but they can't give it when it appreciates, which really sucks.
Yep. A couple other interesting news items. There is a report that was published in No Bullshit Bitcoin, which is a fantastic Telegram channel if our listeners are not already involved in it. But Georgetown Law reports that ICE or ICE surveillance, Dragnet, now tracks 75% of Americans. According to them, the agency spent approximately $2.8 billion between 2008 and 2021 on new surveillance data collection and data sharing initiatives. That blows my mind. 75% of Americans, like what the actual fuck?
Yeah, I mean, not good. Go ahead, Q. Sorry.
No, we're just in a surveillance state. I mean, look, as we move everything to the digital realm, it is increasingly easier for us to have our identities tracked, traced, and whatnot. I mean, that's why it's so important, I think, to understand your privacy measures and how secure you want to be. I think a great resource for all of this is Matt Odell. If you're not already following him, but you care about your privacy and self-sovereignty, you should absolutely be up to date with what Odell talks about there. I mean, look, you're talking to a guy who has felt as though the government has been watching him pretty much consistently since 9/11. So all I'm going to say to all you white people is welcome to the club.
Yep. Opt out of the system, buy Bitcoin, protect your privacy. The problem that the classic argument is like, oh, if you don't have anything to hide, like you're good to go. The reality is these systems that collect your data, they get hacked all the fucking time. I used to work for the federal government. I worked for UCSF and the VA, and I have received no fewer than 3 separate notifications since I worked for them in 2010 that like, oh, we're so sorry, bro. All your shit got hacked. So we're going to like give you a year's worth of like free internet surveillance, which is garbage. And, like, what do you expect us to do? Like, it's not our fault that we asked for like stool sample and DNA and your thumbprint and a retinal scan. Like that was just security clearance you had to have. Like that shit is wild. And so don't let anyone tell you that if you don't have anything to hide, you don't have anything to worry about. Again, it's not about who is collecting the data necessarily. It is, at least in this current epoch, about those systems getting hacked. The federal government has been hacked a number of times, and the Office of Personnel Management got hacked very spectacularly. I forget what year it was. It was in the last 5 years. And the number of federal employees who had all their shit leaked is just astronomical. And anytime you allow your data to be collected into a centralized system, whether or not you trust the people who are collecting that data, which you shouldn't, it creates a honeypot that people are incentivized to get access to and then use that data against you. So it doesn't even have to be about whether you trust the people that are collecting it. It is about the honeypot that exists and the likelihood that that data store will be hacked and taken advantage of, eventually fucking you.
Yeah, I think that's a great point. I know Odell always recommends "Have I Been Pwned" is the name of the website. So that's have I been pwned.com. He obviously recommends don't do it without going onto a Tor browser and doing it discreetly. But yeah, he's like, if you go in there and you type in either a phone number or an email address, you can see all the companies that, let's just say you bought tickets off MasterCard or what's one of those ticket platforms, like Ticketmaster or something like that. If let's just say you gave him your email, your phone number, and your address, it'll appear like, oh yeah, this database was breached, and you like it'll show all the websites where that email or phone number was given up, basically. And yeah, it's some scary stuff. And then they can start linking it back to all these different things of houses that you've purchased or where you've lived or where you went to college or whatever. And it gets very creepy that yeah, they can basically track you or find you or cause harm to you or your family. It's not good.
That's all I got.
On a lighter note, tickets for Bitcoin 23 are available. They will never be cheaper than this. So do it. Buy your tickets. Buy them. Everything will be announced in a month. Okay. Stop asking us when it'll be, where it'll be, who the speakers are. I'll tell you one speaker. It's going to be Pete and David Bailey. David Bailey for sure will be a speaker. And Pete. Any last words, guys?
No, man, this is great. Not your keys, not your coin. Get your shit off exchanges. Protect your privacy. Use a VPN. Don't trust verify.
If you have Coinbase, get it off there, ASAP, get rid of that exchange and then use something different. And anything you do buy, self-custody as soon as possible. That's it for me. Buy the dip.
Stack stats and stay humble.